Hi everyone and welcome to tonight's seminar. My name's Aaron Curry, and as the screen says, tonight's seminar is Property Sourcing and Hands-Free Investing webinar. Simon's very kindly invited me to get the opportunity to speak with some of you guys, share some of my learnings and things that I know about property with you, and also to tell you if it interests you about our product offering and what we do at the Insight Group. The aim over the next hour is to share lots and lots of learnings, lots of tips and techniques that I've picked up across time, and hopefully you'll get great value out of that anyway. And if it works out from that you'd love to work with the Insight Group, great. And if not, that's absolutely fine as well. Just a few quick domestics. If you've not used the webinar system before, then you should see up on the right hand side of your screen that there is a question mark box. If you want to ask some questions, please feel free to do so. I won't be able to answer questions as we're going along, but we'll run till about 8:30, but I'm totally happy to stay online for as long as it takes to answer every question that is asked. So you can either ask questions in that way, you can ask questions via email later on, or we'll actually open up at the end and I'll talk directly to some of you that want me to do that. So please feel free to put your questions as we go along, but forgive me, I won't be able to answer them until the end. I'm going to cover a lot tonight and I'm going to go reasonably fast. Again, I'd love to fill in the gaps. I've only got a limited period of time. So if you've got any questions from what I've been through, or if I don't go into anything in enough detail for you, flag it up as a question and we'll pick it up again later on. Or feel free to drop me an email separately and we'll have a chat about that at a later point. So I really am here to help you guys and want to help as much as I can. Okay. I just want to check, we've also got a hands up facility, which you should have on the screen. There should be a picture of a hand, which is how you can put your hand up. I just want to get a feel for the people that are on here tonight, just so I can pitch in the right way. So the email that we sent out inviting you to join, there were 3 main categories on there of types of people that we thought might find it interesting. So the first category on there was people that have got enough money to invest, but don't always have enough time to invest. And I was just wondering, if you're out there and you know how to use the hand thing, or have a play around to see if you can you just put your hand up if you are an individual that has got enough money but doesn't always find the time that they need to invest in property? Just be useful for me to get a feel of who's in the audience. I can see some hands going up now. Andy, I can see your hand up there. Catherine, Kathy, David, Glenn. That's great, guys. Quite a few more names there. Paul. Brilliant, guys. Thank you very much for that. That's useful for me to see. If you guys could take your hands down, it would also be useful for me to know if there's people out there. The second category was people that want experts to do it for them so they make more profit. So they may be interested in property, they may already be involved with it, but they actually think it would be useful to have experts doing it for them. Again, if you can just raise your hands, guys, so I can get a feel for how much of the audience that is there. Rupert, I can see you on there. Peter. That's great. Okay, quite a few of you putting your hands up on that one as well. Okay, great. And lastly, there's another branch of people that we work a lot with that may find this audio useful, and that's people who are looking for JV partners. So they haven't necessarily got the money to invest, but they want to be able to attract JV partners by working with really experienced people. If that's you, can you just put your hand up for me? That's great. I can see quite a few hands going up there as well. James, a couple of Johns, Lara, Mario, Melanie. Brilliant. Okay, guys. Well, I absolutely promise you that if you're in any of those 3 camps that you'll get value from tonight. And also, if you're not in any of those 3 camps, but you fall in a different camp, you'll get value from tonight. Okay, so what's the agenda for today? The things that we're going to cover today. There's 4 real areas. I want to, first of all, give you a feel for myself and the Insight Group so you know who's speaking. We're really going to delve into property sourcing to give you some ideas. And I'll share some of the details on how we successfully get to see £60 million worth of property per month that comes to us with at least 20% of discount. Okay. I want to go through the Insight Group's core areas and core stats that you must master to succeed in property. These are to share with you how we invest for people, but you'll also get great learnings if you're investing for yourself. And at the end, I'd like to just talk you through with your permission, the Property Insight products and why it might be right for you if you're any of those three camps we've already covered. Okay, a bit of background about myself. I am the CEO of the Insight Group of companies. The Insight Group is 4 companies. You've got Property Insight, Rental Insight, Maintenance Insight and Mortgage Insight. The Property Insight is the key company that sources investment properties for our investors. Rental Insight manage them. We do the maintenance and the mortgages. We'll come back to that later. I've got over 100 rental properties myself in my own portfolio, and we run our portfolio 98% occupied and 95% paid. And I'll come on to how a bit later on. I've done buy-to-let over the years. I've done flipping, where we buy property and sell it for a profit. We've done development work. We've done new builds, some of it successfully, some of it not successfully. A bit of options, commercial stuff, and some foreign property, again successfully and not successfully. I've made lots of mistakes over the years, but been able to learn from those mistakes and hope to share that with you. Successfully run these businesses, and our aim is always win-win relationships. If everybody's winning, everybody's happy, and business is a lot of fun. Just interestingly, Mortgage Insight is the second biggest provider of buy-to-let mortgages to TMW. So although it's not my main lead business, it is my business. And Money Supermarket used to send all their buy-to-let leads to Mortgage Insight in 2008, 2009. Latterly, we focus on other things, so we still have that relationship, but not strongly. But it gives you a feel for the background. The Insight Group has got property experience since 1995, 17 years now. We've been financing property since 1998. We've got access, as I said earlier, to 60 million of discounted property per month. We buy to incredibly strict rules, meaning that 98% of the deals that we get shown, and these are all deals with 20% plus discount, get kicked out. So even though they're 20% plus discount, 98% go in the bin. We always buy clients' properties through at least a net 15% discount to them, and we work with 50 to 80 investors a year. I share this just to give you a feel that hopefully we know what we're doing and we know what we're about. One of the key things that I thank you all for tonight is coming on. We go on webinars, we go on courses to learn, or I hope to learn, and I thank you for giving me an hour of your time tonight. I genuinely do. Anthony Robbins, who's one of my great role models, one of his quotes is, "When you out-learn me, you will out-earn me." So I'm bringing a lot of learning to the table, and I really want to encourage you to do as much learning as you can. The third point on the slide is absolutely key for me. When you're investing in property, you've got 2 paths you can follow. Most people tend to fall into property. They'll buy their first property, they'll get it by accident, or they'll get some money together and they'll go buy one before they realise there's people out there that can help them. And they're not really masters at what they're doing. And you've really got 2 paths in life with any skill that you're trying to master or to learn. The first is to learn from the experts. Go find the experts, copy what they do, and become a master yourself. And the second is to let the experts do it for you. And in any part of my business, we'll do one of those 2 things. So we'll become the master by copying other experts, or we'll let other people do it for you. And I just wanted to plant that thinking in your mind early on tonight, because often people don't make the decision to do one of those 2 things, and you end up in the middle and not quite mastering it and not getting the help you need, and it becomes stressful. You may say, why are cheese sandwiches on this slide? I have made lots of mistakes in my time in property, as I said earlier, and I could fill a webinar just with the mistakes and the learnings. When I first started out in property back in 1998, we were in a very bad place. We couldn't even afford to go to the pub with good friends for a meal. We had to stay at home and eat cheese sandwiches. And at that time, I read a fantastic book, Rich Dad, Poor Dad, by Robert Kiyosaki. And if any of you have read that book, you'll know that there's some fantastic, fantastic learnings in there. And I set the goal, having read the book, to have an income of £6,000 per month, 10 years from that day. And told my then wife, Sarah, that that's what we were going to do. And she, of course, thought we were absolutely crazy because we were sat eating cheese sandwiches. And I went out in the next couple of days and bought the first property, which again, she not only thought I was crazy, she went absolutely crazy. Because here we were eating cheese sandwiches, but I'd found a way to buy a property using bank finance. It was no money down in the old days. I got a loan and I got a mortgage. But the reason that I share this story with you is that goal setting is absolutely key. If you're setting out in property, if you're midway through it, if you've got a big portfolio like we have, you need to know what the next goal is. You need to know what you're trying to achieve. And without setting those goals, you don't know what path you're on. And Simon Zucci obviously runs some fantastic courses that pick up on this and help people to set their goals really clearly and be able to know exactly where they're going. And I can't encourage that enough. Okay. Moving on. I wanted to make sure I gave you lots and lots of useful stuff tonight. So the first thing I'm going to do before we even get into any meaty stuff, there's 4 free resources that we have in our company that we give away. Well, there's three free ones and one that is a new one. The first one is 52 free weekly emails. You can see the email address on the bottom there, info@propertyinsight.info. I want to give you lots of free stuff. If you just drop an email to that email address, do it now while we're on the call or do it later, just make a note. And if you put 52 free weekly emails in the title, then myself, Simon, and 4 other property experts in the UK do a recording each week. It's a 3 to 9 minute clip, and we send it out for free each week. It retails at £197, so that's available for free. Just drop an email and you can have that. We've got some website videos which are the same. If you just put website videos in the title, you can have that. The free rental pack has got tenancy agreements, eviction procedures, a couple of free videos on how to get 98% occupied and 95% paid. So if you're managing or renting your own properties, you'll get great value out of that. Please register for that. And my book is just being launched, the Property Coach from Aaron Curry. It retails for £15. For people on the call tonight, I want to give that book to you for free in return for getting some good feedback on it. So if you want any of those 4 things or all of those 4 things, just drop an email now to info@propertyinsight.info and they're yours for free. Okay. Keep that address because there's a couple of other offers as well that I want to make you. Just ask for the ones you want, but I can't fit it all in tonight. It gives you some extra stuff. Okay, moving on quite quickly. Key partners that we work with. We work closely with Simon and all his investors. We work with over 80 property sourcing companies and individuals within those companies in the UK. We work with all the PIN hosts, Action Coach, which is the biggest coaching business in the world. A lot of their coaches recommend our business to their clients who are busy building their businesses and want to build property. Many IFAs and solicitors, with members of the Estate Agency Ombudsman and the FSA for the mortgage business. And we work with key speakers on the PIN network as well. So there's lots of people you can take reference from about the Insight Group. What the Insight Group do, and then I'll move on to the core of tonight. We source and negotiate great rental properties below market value, and that pays for our services and it adds additional profit to the investment from the start. So our clients get 30% growth in the first year. We finance property purchases through buy-to-let mortgages and commercial finance. We've also got a mechanism now, which is very recent, to release money from pensions for residential property investment. I can't cover that tonight, but please do ask us about it. We find great tenants for all our properties to keep occupancy at very high levels and to improve the return. And we manage the rent of each property. We collect the rent, we manage the maintenance and everything else. So it literally is, if people want it, complete hands-off investment. The key to property investing, or for me, the place that the biggest profit is made is at the beginning. And that profit is made by sourcing fantastic properties. So what I want to do now is just share a little of our tips and techniques and how we come across the level of properties that we come across. We look at 60 properties that are already 20% below market value to buy one for our investors. But how do we get those 60 properties? So I'm just going to go through a few of those tips and techniques. Again, if I'm not able to cover it in enough detail with you, please drop me an email or have a chat afterwards and I can share in as much detail as you like how we do these things. So first of all, leaflets. People will have heard of leafleting. Few key things with this. The absolute key thing is persistence. If you are leafleting in an area, too many people that I've spoken to, too many investors say, I've tried leafleting, and then you talk to them in a bit more detail, and they tried it 3 or 4 times and then they stopped. Now for us, we'll pick an area and we'll leaflet, and that area will get leafleted a minimum of 10 times. Because people need to see your brand, people need to see you touch them on average 8 times before they even think about buying from somebody. Okay? So if you drop a leaflet through somebody's door 2 or 3 times, you might have got just some basic recognition, but they're not going to start buying from you. They're not going to start calling you up to sell. So if you're going to commit to leafleting, you need to commit to an area, and you need to commit to dropping in that area at least 10 times. You need to stand out. So your leaflet needs to be probably yellow and black are the colours that we use, but big, bold colours that stand out. They don't look particularly pretty, but they need to stand. It needs to stand out. It needs to be something they'll pick off the doormat. Okay. You need somebody reliable to deliver it. If it's in with other leaflets, less chance of being seen. We use teenage children. We don't manipulate them. They get well paid. But we use people that we know and trust. And we'll do a spot drop. We'll go and knock on 10 doors afterwards to make sure they have delivered them and not dropped them in the hedge at the end of the road. Consistency is key. I've covered that. But you need to drop at least 10 times, probably more. We use A5 in size. Okay. And your leaflet is very simple. Can even be a bit chatty. It needs to be something along the lines of, we will buy your house guaranteed. We can buy in 2 weeks. Call this number. And put somebody's name on there. I'll come back to this, but put a lady's name is normally preferable, but so call Sophie on this number, and people are more likely to pick up the phone. Billboards is one that a lot of people miss. Billboards, i.e. big signs that are on the side of houses, more often in big towns. But there are billboard spaces, even if there aren't billboards on them, there's billboard spaces or places that billboards could be put in key areas that we buy in, and key areas that you could buy in. It costs very little for somebody to get permission from the council to put a billboard up, providing the council will give it. So if you become an expert with the council at where there aren't billboards that there could be, go knock on those people's doors and offer them £100 for 3 months to put a billboard on the side of their house, and tell them that you'll sort everything out with the council, you could suddenly find that you get access to a billboard, and you can use that for the next 5 years with massive promotional stuff. So think about billboards. To let boards, if you let your property, whether you let it yourself or not, use a to let board. The reason I say that is when you've let your property, even if you've let your property in the first day, put the to let board up. You then, by council law, are allowed to keep a board up for 30 days. Most people put let by on there, like the estate agents put sold by. You put a different board up for the next 30 days. We guarantee to buy your house. Call Sophie and this number. Okay. People in that local area, if you've bought a house and you're renting it, you probably want other houses in the same area. So the to let board changing into a guarantee to buy your house board can easily fill that gap. Okay. Sandwich boards is really cheesy. It's categorically not something I personally want to do. But we have some teenagers. We aim to get 19, 20-year-olds, normally students rather than teenagers, to do this. They need to be a bit switched on. But we put a sandwich board. We will buy your house guaranteed. Again, bright colours, yellow and black, or some red on there, and you get them to walk up and down the high street. And while they're walking up and down the high street, you can see that people will come up and say, "Well, what are you doing? What's this about?" And as long as you give them a little brief, you don't want them to be selling your business, you don't want them to be dealing with the person that wants to sell, but you do want them to capture some names and say, look, I'll get the boss to give you a ring and he'll see if he can help you. It's a fantastic way, very cheaply, £50 or £60 for the day to get the person walking up and down town. Fantastic way to pick up some business. You need to find that student who's a bit cheeky, happy to do it, and smiling a lot. Okay. Now, some of you will be sat there thinking, sounds great, I can see that working, but I don't feel I could make that happen. Guys, these little things, getting that sandwich board out there, might cost you 70 quid a time. You do it 10 times, it costs you £700. If that gets you a deal that is £20,000 less than you would have paid for, is it worth it? Is it worth stretching your comfort zone a little bit to get involved in something you wouldn't normally do? And I'd strongly advise you that it is. Okay. Moving swiftly on, text messaging. We'll buy a local newspaper. We do this often in the Nottingham area, so forgive me if you've had our texts. You've got a lot of people who have ended up being landlords because they can't sell their house. Okay. They're advertising in the local paper to rent a property. They'll get a text from us that says something along the lines of, we'll buy your house guaranteed for 70% of what it's worth. Okay. Now, we'll get a lot of messages back, some with choice words in them, some just politely telling us to go away. But we'll also get messages back saying, tell me more, or I'll sell you it for 80%. Okay, we can then call, negotiations start, we take it from there. So that strategy is a strategy, as I said, that we use in Nottingham. We buy a property every quarter at the moment from the text messaging strategy. The text messages actually, we use another website, fantastic website, elance.com. Have a look at it. We use people abroad to send the text messages. It costs us about $5 a week to send those messages. So for $65 a quarter, we buy a property with at least 20% discount every quarter. Okay. Chain break, boy on a bike. The day that most chains collapse is a Friday. You want to be the person in your local area that people call when the chain breaks. You want to be the one that they pick up and ring. So the best way to do this is to have, again, a teenager can be great. Someone who likes riding the bike. You have a specific leaflet that goes through somebody's door. They drive around, they look for houses that have sold signs on them. And each Friday, every house with a sold sign in the area you'd like to buy gets your leaflet. And the leaflet basically says, has your chain fallen through today? Call this number, we will make you able to complete, or we will enable your completion. Call Paula on, and you give another number. Okay. Sounds really simple. Would it work? It does. We buy a lot of houses from chain breaks where the chain's broken. You can then speak to each of the 5 people in the chain that are already packed up in boxes, desperate to move. You're getting them an ethical solution. If they'll all knock £3,000 off their price, you've got a £15,000 discount in that example. Okay. Also get to know your estate agents. Make sure they get that chain break leaflet. They probably need it every day. Get to know them really well. There's a whole set of strategies around that. Simon does some courses on estate agents, so do Progressive Properties. But estate agent chain breaking, the other way to really make sure you get those guys is if you're getting junk leads. So from all this other marketing you're doing, you're getting leads where people will only sell for a 10% discount, or you can't make it work for you. Pick 1 or 2 estate agents that you want to work with and start to give them leads. So when you can't help somebody, say, but I do know an estate agent who'll look after you. Do know an estate agent who'll get your house sold as quickly as possible. And start to take the estate agent leads. Guess what? Once you've given them 5 or 6 properties that were only your junk properties anyway, they'll be very keen to give you one or to ring you when there's a chain break opportunity or they've got a very great discount. And the car boot strategy that we've got on there, very, very similar to the sandwich boards. You can either slam them on the top of the car, I've seen that work very well, or you can have your guy with your sandwich board working around the car boot sale. Again, you might say, well, is that my target market? These are the people that have got houses to sell that are probably the cheaper end of the price range, ideal for buy-to-let property. So again, car boots can be a fantastic way. You don't need to be there. You can send somebody else to do the hard graft. But for 50 quid, you're picking up some interest and people interested in selling. All of these things, just like the leaflets, do consistently for a period of time. Don't do them forever, but do them 10 to 15 times and literally write down the results from every time. Did the car boot? 3 people called. Did the car boot? No calls. Did the car boot? 5 people called. By doing that, it's not a gut feel of whether it works or not. You've actually got it in black and white how that particular strategy worked. I've got on the bottom here, NB, different names and maximise junk leads. These are 2 key things for me in this marketing. One is on each different piece of marketing, we'll put a different lady's name. So the car boot might be Sophie, the leaflets might be Paula, the billboards might be Stephanie. The reason we do that is when the call comes in, we immediately know whether they come from a leaflet or a billboard or a car boot. They don't know we know that, but we can therefore handle the call slightly differently. Okay. In terms of maximising the junk leads, the absolute key there, guys, is as I was just saying just now, every lead you generate, there may be someone else out there that can do something with that lead. Get a fantastic network around you. There may be a deal that's only got 5% discount, but somebody who's brilliant at options would love to have that lead. So what I strongly encourage you to do is to make sure that all those things are in place. Can I just check, guys, that you're all able to hear me okay? Can some people just put some hands up so I know that everything's going okay? I just had a blip with the speaker, I think. Fantastic. Thanks, guys. Yeah, I can see that it's working. That's great. Please feel free to shout out if it's not on the question section. Okay, what I want to do, just give you a few stats. I imagine that you're on this call because you know that property is a good thing and you're up for property. But just to share a few stats with people, the average UK family now spend 49 minutes a day together, okay, because they're working so hard, there's so many other things to do. Absolutely scary, okay. For me, property is a fantastic way of getting more time back with your family. It's not about the money, it's about what you can do with it. Current pension pots, okay, in 1990, your pension pot had to have £200,000 in it to get an income of £30,000 per annum from your pension. By 2011, you needed over £500,000 in your pension pot to get £30,000 per annum. That is scary. And as things progress forward, there's some incredibly scary stats, especially for our children. Not so much for us, scary for us, really scary for our children. And for me, property is a way to make sure not only am I looked after for life, but so are my children and children's children. Okay. And what do you need to actually have that size of pension? Well, if you start saving now, and you're lucky you're still in your 20s, you need to save £550 a month just to get that 30 grand income for 40 years. If you've only got 20 years left, you need to be saving £1,700 a month into your pension just to be able to have £30,000 per annum of income. Okay, I'm going to show you some slides later where property just blows that away. Many people don't understand pensions. Okay, I'm going to flip past this slide, but you know, think about your own pension pot. If it isn't working for you, as I said, we have got mechanisms now where people can use their pension with residential property. It's more complicated than that. It takes a bit of detail to explain. I suppose if you're interested in that, drop the word pension on an email and I'll get one of our pension experts to give you a call back and see if they can help you. Fascinatingly, even the government think that pensions are a bad idea. There was a study done by Lord McFall. This is the guy here. He did a study on pension funds and how they're performing, and his words are there: bloody hell, I'm glad I'm already minted. Lucky man. Because anyone relying on a private sector pension to see them through old age is completely screwed. So, you know, I beg of you, and I beg of you for your friends, whether you invest with the Insight Group and Property Insight, you invest elsewhere, please, please get on with your investing. Please get on with something else, whether it's stocks and shares, property. People need to take control for themselves. It really is scary. Okay, so for me, why UK property? Now, you probably know a lot of this. I'm not going to spend a lot of time on it, but over the last 80 years, property values are said often to have doubled. Simon will talk about that at most of his seminars. They double about every 10 years. And it's been 7.9% per annum over the last 80 years. Okay, the last decade, which the papers have been continually announcing as a disaster for the housing market, over the last decade, prices still doubled. And that's from 2002 till now. These stats are a bit older. And although we're getting some ups and downs at the moment, and will those ups and downs go on for another couple of years? Yeah, they probably will. And will there be some bad months and some good months? Yes, there will. They are going to go up again. And all the economic factors point to that. If you don't believe that, please, please don't invest in property, because there are better investments you can make. So I'm going to assume that you do for now believe in that. Government forecasts say that it's going up. And yeah, there's all the stats there that support that. Okay. The reason for me that UK property is just so powerful, the absolute key is leverage. The fact that you can borrow money from the bank. If you put a 25% deposit down, you put £25,000 down, the bank will give you 75,000 of their money and enable you to control something worth 100 grand. So you've only put 25,000 in, but when that goes up 10%, you make £10,000 on the 100,000, not on your 25. And this is the absolute key with property. If you compare it to any other investment, apart from stock market options trading, which you have to be incredibly professional at and incredibly well trained at, you don't need that level of intensity with property. You can make massive profits from the leverage, and that's the absolute key. So if there's anyone out there with unencumbered property, obviously speak to your professional advisors around you. But, you know, I plead with you to think about the leverage that you're missing out on. Okay. There's a few slides here, again, that just show you some price increase stats. So this is going back over the last 40 years. The average increase is about 11.3. The red line is house price indices. So we started with a house on the left worth £3,800. It's now worth £175,000. And the green line shows the increase or decrease each year. And you can see if you look for the minus figures along there, yes, we had 2 years recently, minus 7.6 and minus 0.8 on the right, and we had about 3 or 4 years in the middle where we had minus years. Apart from that, in the last 50 years, 45 years, no minuses. Okay, and a lot of double-digit growth. And this shows you we actually model for our investors. We always model cautiously, and I want you to do the same. We model based on 4% growth. We never assume more than that, which means it takes about 20 years, 20 years to double. Okay, actual growth at 10.3, and this just shows you the last 40 years. If you'd invested with us, we would have modelled on the blue. But actually, what would have happened in real life is the red. And look at the difference over 40 years, even over 20 years. So model on 4% and you'll just blow your projections away. Even if the worst things happen, you should be fine modelling at 4%. Just some government stats here. This came from some government forecasts. Now, I'm not getting into politics. I'm not saying who's right and wrong, and the forecasts are often wrong. So I'm not saying these are gospel truth, and this will definitely happen. No one's got a crystal ball. But it's just to give you a feel, they see by 2014-15 us being back to kind of 4% plus growth rates. And I believe I agree with them. Don't always, but I do. Okay, so who are Property Insight's key clients? Some of you guys will be on the call, and some of these will tick some boxes for you. So business owners that are too busy making money make great clients for us. They're busy making money, and we can grow them a portfolio in the background. We have a lot of business owners that come to us who would like to master property themselves, would like to do it themselves. They've maybe got 1 or 2 properties. They've had a go at it. They know it's something they should be involved in, but they just don't get the time free to do it. And they don't get the time free to master it. So the bits they are doing, they aren't doing as well as they could do. Okay? So we'd love to speak to people like that. Executives and professionals, people that have got a great career, high-earning employees. Again, they don't have the flexibility of time to invest. And they're not building assets in the background. The business owner might be building an asset, but these people aren't always getting the time to build their assets. Okay. There's people with pension funds, I've touched on it, but who'd like to be able to use them, some of their funds, to invest in residential property. Okay. It needs to be a fund of £50,000 plus. That's the downside. But you can, work in certain ways, get that money working for you and helping you invest in residential property. People who want to use somebody with expertise as they understand it makes money more quickly. There's a lot of our clients will come to us and say, I know how to do property, I've been doing it, I want you to take away the hassle and I want you to make me more money because I know you'll make more profit. I can source at 10% discount, you're getting 15 for me. And people wanting to attract JV partners. This call isn't specifically in detail for you guys, but I've got an offer at the end for you guys that will really help you and give you some real solid stuff so you can more easily attract JV partners with some of the stuff that I'm covering today. Okay. Just another couple of things. I'm not going to go into leverage in detail. We've touched on house price info there, but if you want some more detail on that, we've got 2 videos. They're about 10 minutes long, one on leverage and one on house price indices. If you just drop an email, either saying leverage in the title or saying house price in the title, then the team will make sure that they get a copy of those videos out to you in the next couple of days. They're online videos. They'll get those out to you. And you can just learn a bit more about leverage and get some more house price information for yourself. Okay. What I want to do now is just spend a couple of minutes going through kind of the key areas I believe somebody needs to master to be a great investor. So I hope these will help you. You can kind of sit and either tick them off and say, yes, I know what I'm doing there. Or you can sit and think, yeah, that's something I need to work on and do some more work on. Also, while I'm doing it, I'll just cover how Property Insight and the Insight Group can help with these things. The most important thing for me is mindset. Okay, Simon offers his mastermind program, which is a phenomenal resource. He offers his other courses, his PICS courses and other courses he runs. And by going to the PIN meetings, the meetings run on a monthly basis, you'll get around the right people and you'll develop the right kind of mindset. Okay, it's absolutely crucial. It's the first thing anybody needs to deal with. If you imagine an iceberg with the tip of the iceberg, the majority of that iceberg is under the ground. Most of that is your mindset in property investing. The tip is what you see, it's the returns on your investment. It's the bit underneath that's crucial. So I'd urge you to work on that. One of the benefits of working with Property Insight is that won't get in the way. because we'll be telling you what the best investment decisions are, and we'll be doing it for you. Yes, you get to challenge it and query it, but we'll take the emotion away, we'll strip it back, because we'll be making investments based on investment decision. Okay. The second key area to master for me is sourcing below market value. Okay. You lock in the profit at the beginning. Investors that buy a property for roughly what it's worth, or they come to us and they say, it was up at 100, I got it for 95, I've done well. Well, if it was up at 100, it's probably worth about 93 on average. Rightmove did some statistics. The average house sells for 7% below its last price on Rightmove. So somebody where it was up at 100, he got it for 95, that's probably no discount. Okay. So 20% genuine market discount. Is it easy to do that? It's not necessarily. You need to learn the skills and develop the skills, attend the courses, learn as much as you can, and then develop your skills on that path. As I said, the Insight Group look at 60 deals that are already 20% below to buy one. Do you know anyone else that fussy? And would you be that fussy? Or would you like to have someone that fussy working for you? Okay, negotiating and purchasing. That's about how to put the offer in, how to say the right things. Again, there's some great courses on that run by different people at Progressive Properties, run by Simon at different times. The Insight Group will get you great deals guaranteed, and it's about having the right power team around you, having a solicitor in place, a mortgage broker, an independent valuer who can go check you've got the value right and you're getting the right discount, to have to run around to do all of that for you. Again, with the Insight Group, if deals are falling through or wobbling, it's getting dealt with for you. You're not getting distracted at work or pulled away from other things and feeling the stress of it. It's done for you. Financing the purchase is key. You need to have a great mortgage broker. There's some fantastic brokers out there. Again, all linked up to the PIN network. If you go to any of the PIN meetings, there'll be a mortgage broker there that you can work with. Mortgage Insight would be delighted to help you guys. Again, if you've got any mortgage queries at the moment, drop mortgages on an email to the email address I gave you, and Richard, who runs our mortgage department, can come back to you. As I said, we're the second biggest provider of mortgages to CMW. Refurbishment, having the refurbishment skills is key. So remember, guys, I was asking you to kind of tick these off as you went along. Which of these skills are you highly scored at? Which are you not so highly scored at? Maybe give yourself a score of 1 to 10. It will help you decide what to invest your time in and what to learn next. With the Insight Group's offering, when we source properties for people, we refurbish those properties and get them ready to rent. There's an average cost there of £3,500, but that's using all of our tradespeople who work for us flat out a lot of the time, and we get real discounts from them. So we spend on average £3,500. It can mean we spend £1,000 on one property and £7,000 on the next. But when you redecorate, you put new carpets in, there may be kitchen and bathrooms to change. That's the average amount we're spending. Okay. If you're working with the Insight Group, again, all of the ongoing maintenance, A, you get at vastly reduced prices because we use the Maintenance Insight team to do it, and those savings are passed on to you. And B, it's all handled and managed for you. Most of our investors don't even know anything about it. They just hear on the monthly statements what's going on, and they're happy with that. If they want to be more involved, they can be. Okay, the hassle of tenanting a property. As I said earlier on, we manage our properties, both our own and our clients, at 98% occupants and 95% paid. Okay, most letting agents run at about 80 to 85%. Now, that's not their fault. They don't choose the houses they get to manage. Because we're buying the right houses. Here's a tip for you. Whenever you buy a house, advertise it to rent first. If you don't get at least 10 responses from your advert in the first 3 days, do not buy the house. Okay, so even if there's £50,000 a discount, if you do not get those 10 responses, do not buy the house, because it will cost you work and effort to keep working on that property and keep that property rented. Okay, it is a classic mistake people make at the beginning, and then they struggle with tenants, or they only get 3 people interested. They have to take the one that actually wants it. You don't get to choose your tenants. Okay, by working how we work, we'll get 3 or 4 people fighting over a property every time, and then we'll look for people that are lifers. We can ask for bank statements, we can ask for references, and we'll get people who want to stay in the property long term. 3, 4, 5, 10, 15-year lets, and that's how you get your occupancy rates up, by buying the right house in the first place. Okay. As I said, there was the video on that you could request. And lastly, we make sure that all our property source have that rent-up check done before we buy them. So any investor investing with ourselves won't have a property bought for them if it hasn't already had those checks done. And the last couple of key areas, okay, tax and accounting is key, okay. For our clients, we have one spreadsheet that provides everything they need. At the end of the year, they just send that spreadsheet to their accountant. It's got everything on it. They don't need to do anything. It's got the rents in, the money out, summary of their bank statement, everything, all provided for them, okay. But if you're investing for yourself, set up that spreadsheet. Put the time in at the beginning to put those structures in place. So many investors I speak to get stressed because it gets to December and they're having to do the tax return for last year for the tax man, etc., etc. And it's because they never put the structure in place at the beginning. So put the structure in place, then you've got it to work with. Okay. We'll also, as part of the Insight Group, obviously our aim is to grow people portfolios, so we advise the best time to refinance, how best to grow the portfolio, including people's current properties. So our investors that invest with us with properties already will help them grow that portfolio as well as with our investment. Okay. I'm aware of time, so I'm going to very quickly skip through this. I've talked about the leverage video. The strategy for me, if you speak to professional property investors, they will invest in property and they will, whilst they're growing their portfolio, they will continue to refinance. Now, I don't believe you should refinance above 75% loan to value. There are some mortgage products out there at the moment where you can, and there are a lot more that will come back into the market over the next couple of years. But we really strongly don't recommend you going above 75. You've always then got a buffer if the market drops, that you'll still have equity in the property, and you've got some protection in there. Okay. But I would always go up to 75% because that money is money you can release that you're then able to invest in the next property and to grow your portfolio as quickly as possible. So in our model, if somebody invests, let's say, £60,000 and we buy 2 properties with that, we can remortgage those properties after 6 months and get a third property. By using the equity discount we got, we can re-release that and buy a third property. When those 3 properties have gone up 10%, we can get a 4th property and so on. And so you grow your portfolio to the level you want it to be. Once it's at the level you want it to be, you've then got the choice. You can keep releasing money and buying more if that makes you excited. You can release the money and spend it, have holidays and cars and what have you, or you can sit tight where it is. This slide just really briefly shows you how that works. So on the top line, 100 grand house value, mortgage at 75,000, 25,000 equity. If the market goes up 20%, we can increase the mortgage to 90,000. That release is 15,000. Tax-free, by the way. There's no tax to pay on that money because it's increased debt. And the equity you've got there is 30,000 still in the property. Okay. Now, with this structure, we always recommend that you don't sell. Why sell a property? If it's going to double in value in the next 10 years, why sell it today? If you don't want it anymore, just get it set up so that a letting agent is managing it and you don't need to do anything and get your statement once a month. You need a great letting agent, but there's lots of them out there. And don't sell because it will double over the next 10 years. And if you sell it, somebody else is getting the benefit of that. When you get to age 70, don't sell. Have it managed for you. Have the income coming in. And as it doubles, then your kids get to inherit it. Okay. There's a lot more detail on this in the website videos. So again, if you clicked website videos earlier on, or if you want to, and send that on an email, we'll make sure you get the website video on this topic. Okay, with your blessing, I'm just going to spend 5-10 minutes telling you exactly what the Insight Group do. I think we can really help some of you guys, and I'd love to help you, obviously. What do? We basically invest for our investors, and we build them a portfolio bought in their name. It's their portfolio, their properties. They can do what they want with them. They can sell them if they want. They can choose to follow our advice or not. The minimum investment is £60,000. For those of you looking for JV partners, or that have got less money than that, we have a mechanism for you to be able to attract other people to invest with you, and I'll cover that a bit later on. But yeah, minimum investment is 60,000, and our typical clients have anywhere between 60,000 and £500,000 that they invest with us. But I'll work on the £60,000 model just to show you how that works, and that can come from cash, from equity, or from pension, or a mixture of the three. Okay. We buy people 3 properties in the first year. So the left-hand side of this slide shows you the first year. And the first 3 properties we guarantee will have 15% genuine discount from an independent RICS valuation. I'll cover that in a minute. That gives you a minimum of 30% increase in cash and equity at the end of the first year, guaranteed. So your 60,000 investment will grow to be at least 78,000 at the end of the first year, having paid for any fees, any costs, and everything else. It's all managed for you. So it's a hands-off investment. You can get involved if you want to. If you're a tradesman and you want to do the doing up, if you're a letting agent and you want to manage the properties yourself, you can do. But it's all managed for you if you want it to be. All done for you. You just get a monthly statement. And most importantly, these properties are bought to our rules. I'll cover them in a bit more detail in a minute, but categorically bought to our rules, which means we can get 98% occupied, we can get 95% paid. And in the long term, we work with investors long term with a £60,000 investment, just based on 4% increases per annum over 10 years. You'll have 7 properties with a value of at least £1 million, at least 200,000 of equity in there. They will produce £30,000 per annum of tax-free income. So if you're investing £60,000 today, you'll have an income of £30,000 per annum tax-free for life, inflation-proofed, that you can also pass on to your children. Okay, and that's based on 4% growth and stopping in 10 years. Okay, you can go for longer, and the growth might be higher. Assets can be passed on to children, as we've said. And no further investment is needed. So we run with contingency. We run planning for all eventualities. So no further investment is needed once the initial investment's taken place. Okay. As I said, many of our investors invest more than 60. I've run with that figure because it's the minimum investment amount. Okay, what principles do you need to believe in to benefit from our opportunity? If you believe that property and values will increase over time by at least 4%, we may be able to help. If you want to invest for medium to long term, if you're about short-term money, if you're about buy, do up and sell, doing development work, doing option deals that make you money today, you need to go learn those skills. We're not the right company to help. But if it's medium to long-term growth that you want, where you can relax and let somebody do the work for you, we're exactly the right people to work with you. The reason Simon recommends us, he's never recommended a property investment company before, and the reason he recommends us is because he's thoroughly checked us out, he's checked our rules, he's checked the way we work, and that's why he's allowing us to be on the webinar, that's why he's recommending you guys listen to us. You need to believe that it's acceptable to release income through remortgaging, that it's highly tax efficient, and it's a good way to grow your portfolio. If you don't, the way we grow it won't work for you. Okay? And if you want to talk more about that, we're more than happy to. Okay? You want to have a stable, secure investment. We don't go for phenomenal returns or phenomenal promises. The stuff we do is pretty boring, but it's boring, it's safe, we know it will let. Okay? It's not big, exciting stuff. It's boring, safe, tick it over, it will let. Okay? And if you believe now's a great time to invest in property, I believe there's another year or two before the market goes up again, and the people that buy now will be getting some great prices, absolutely great prices. What are these key rules that we use? So first of all, we buy at discount. Target at least minimum of 85% of true market value. Okay. Purchase the right properties. Many people buy in their own town because it's easier. I live in Scarborough. I have some investors in York. In York, you can buy a property for 150,000 that will rent for 600 a month. In Scarborough, you can spend 70,000 and it will rent for 560 a month. So you can have 2 for the price of the one in York, and you're getting a lot more rent. So it's crucial to do certain rules. We have certain rules about what we buy. If something doesn't cash flow at least £100 per month before the letting agent, £50 a month after, we don't buy it. That's accounted for maintenance and all other things. I'll cover it shortly. We focus on 3 key areas. You want good capital growth, high occupancy, and positive cash flow. Then your investment becomes quite hassle-free. We only buy properties that will rent well, so we do the advert test first. That's why we get 98% occupancy. And we always, out of your investment, at least 2,000 will get you to holding contingency, working capital at all times. So you've always got that money there to call on. I've got 3 quick property examples to show you. These are example properties that we've bought for our investors. Okay, just to give you a feel, they're 3 average properties that we've picked out. I've not picked out the best or the worst. Okay, Our average clients will buy a property that's worth about 90,000. The range is about 70 up to 110. Okay, so this one's in the middle. You can see here we've got the rental income of 550. We always assume the mortgage cost at 5.5%. The figure we use is we look at what the 5-year fixed deals are at, and that's the rate that we'll assume on the mortgage, because we're looking at a 10-year investment. If we can get at least 5 years at that, we know the mortgage we actually get will probably be a 2-year fixed or a 2-year tracker, and it will be cheaper than that. But in our illustrations, we always work on 5.5%, and I'd encourage you to do the same. And as the mortgage rates go back up over the next couple of years, adjust and look at the 5-year fix and do your forecasts on that. The average maintenance cost for our houses, we manage obviously a heck of a lot, is £80 a month. So that's built in. The buildings insurance is built in. So this property cash flows £112 per month before paying for the letting agent. Okay. Look at the next property. Okay, this one's a property in Manchester, just below our 70,000 threshold. It's one we bought recently. Great rent, fantastic cash flow. If you buy a cheaper property, it's more about cash flow. If the market goes up 10%, this property is only going to go up £6,800. So you're not going to get as much asset growth, but you're going to get more cash flow. A fantastic portfolio will have a mix of asset growth and cash flow. So a client, we might buy them this property, and then the next property might be this one that I've just flipped over to, where the asset value is higher. It's worth 120,000. So the market going up 10% now makes them £12,000, but the cash flow is only £53.50 a month. Now I say only that, that's accounting for all costs. This maintenance cost, they'll be banking most months. As we all know, you don't spend all your money on a monthly basis. The boiler will break, you'll spend a lot at once, then you'll have 10 months with no spend. So you're normally banking more than this £53.50, but that's the net cash flow having paid for all costs. What areas do we buy in? Well, generally because of the price bracket, we tend to buy in this area that's circled in red. We go across west of that, FY postcode, if any of you are in Blackpool. We buy in Blackpool across onto that west-hand coast, and we buy in pockets down south, PE, Peterborough, Cardiff. We've got some great investments. But really for me, the red area there and across into Manchester is the key area where we have people on the ground. We have, in any area, in any town we buy in, we have a maintenance team of 10 people already in place that we know and trust that covers all the trades. We have viewing teams, we have rental teams in place. We have the whole structure. We won't buy in a town if the structure is not already in place to deliver a fantastic service. We aim to buy 20 properties per month, so we have to have those structures, otherwise we'd go crazy at our end. What's true market value? People often ask me. Well, categorically for me, I don't like the way the valuation system works, either from the banks or any other way. For me, we will thoroughly test and work out what we believe true market value is on the property. And once we know what we believe it will be, we'll separately send out an independent valuer, and we won't tell them anything about the property. We won't tell them what we're buying it for, what it's being offered for, what we think it's worth. It's kind of a blind valuation. So say we think it's worth 100. If they come back and agree, well, not agree, if they come back and say 100 as well, that's great. We can move forward and our investor will get it for 85,000. If they come back and say it's only worth 95, we'll work with the lower of the two. So our investor would get it for 85% of the 95. If they come back and say 105, again we work lower of the two, so our investor would get it for 85% of our figure of 100. But by getting that second independent check, and our investors can choose who the independent valuer is, by the way. We use companies like Countrywide Surveyors, but by getting that independent check, you can be really sure you're getting a great, genuine discount. This slide just shows you what I showed you with the individual property slides. So you've got a 100,000 example on the left, 80,000 example on the right, and the cash flow at the bottom is bigger on an 80,000 property than it is on a 100,000 property, and that will be pretty typical. So you buy some in your portfolio for asset growth and some in your portfolio for income. What are the key guarantees that you get from Property Insight? Well, the key guarantees that we offer are listed on the screen, and for me it's critical. If you're working with a company, they need to make some hard cast iron in writing guarantees. So we guarantee 30% growth in the first year on your money. So regardless of whether property prices are going up or down, regardless of what's happening to property prices, you're going to get 30% growth on your money. Okay? So if it's sat in a bank account or it's sat somewhere else, are you going to earn 30% on that money in the next year? We guarantee the properties are fully refurbished to letting standard. And yeah, our teams go in. We have squads, so there's 3 squads main squads that we've got, plus the local specialists, gas engineers, electricians, and they'll go in and they'll totally refurbish a property to current letting standards, okay? And we need to do that well because our commitment is to look after you for 10 years, and our rental team have to manage the property. So if it's not refurbished well, guess who's getting the calls, guess who's dealing with the hassle? So they're fully refurbished to great letting standard, okay? We guarantee that the properties we buy will be let within 8 weeks. That includes the refurbishment time. If not, we pay the rent for you. Okay. We guarantee to work with you until you've got a £1 million portfolio. That's if you're investing 60,000. If you're investing more than that, that goes up accordingly in ratio. Okay. We guarantee that no further investment's needed because we leave contingency in place. Not all of your 60,000 goes into the properties. We guarantee that you can veto any property. You can veto every property as it says, but you can veto any property we show you. So when we put a property in front of an investor, we give them all the facts and figures. We show them the independent survey. We show them the pictures. We show them the cash flow projections. We tell them the results from our advert that we've placed and how many people are interested in the property. They can say to us, I'm really sorry, I don't want to buy that one. It's got a green door. And that's absolutely fine. And they'll get the next property on the list instead. Okay. We're very, very proud to put those properties in front of people. We wouldn't put them in front of people if we wouldn't be happy to buy them ourselves. And we're very upfront with our rules, so our investors know it's ticking all the rules before we show them one. Okay. We guarantee that 60 properties, but with a 20% below market value discount, will have been looked at just to pick out that one that you get to see. Okay. And we guarantee, as I said earlier, that we place that property ad in advance. And that's what leads to 98% occupancy and 95% pay. We can't guarantee 98% occupancy, but that's what we run at. We can show you the facts and figures. We can show you the portfolios that we have and the rents coming in. So we can't guarantee it, but we do deliver it. And the contingency is there for the months where you don't get paid if there is a problem over the 10 years. Okay, so there are key guarantees. That's what you get from the Insight Group. Now, I just wanted to put one little slide in to further whet the appetite. So what if you invested 60,000 and you wanted £90,000 per annum of income? Well, if you've got 20 years left before you want to retire or draw this income, 20 years at only 4% growth invested with ourselves, very simple numbers we can show you, grows to 15 properties with £700,000 of equity, producing £90,000 per annum for life each year. Or if you're more bullish and you believe the market will go back to going up at 7.9% a year, and I do speak to a lot of people that do believe that will come, that there's some pent-up energy out there, and when things kick off, they'll grow again. If they went back to the average of 7.9% per year, then you'd see that over the next 12 years, you would get to a position of having 15 properties, okay, with a 60,000 investment, hands off, just getting your statement once a month. Okay. I really hope you've enjoyed listening a bit about that. There's obviously detail about what we do, and a lot more detail and a lot more questions people will want to ask. In terms of fees, we make our money by sourcing the properties more cheaply than they're passed to you. So if we can source something with 80% discount and you're getting it 85%, that 5,000 of difference can become our profit. There is money put in for refurbishment that comes out of your pot, but it's all part of the pot, as I said. If what I've gone through interests you, guys, you can come on and learn, you can come on and listen, but what I'd really like is that you're able to take some action and move forward. So if what I've gone through interests you in terms of learning more about how the Insight Group may be able to help with you individually or you specifically to grow your portfolio, we tend to work with about 8 new investors a year, per month, sorry, 8 new investors per month. And the reason we do that is that we believe that we can source 20 excellent properties every month at current process. Okay, that's growing all the time, but therefore we want to work with 8 new investors per month. Okay, so the first 20 people that email interested to myself, this is a different email address to the other ones I've been giving you, but the first 20 people that email interested to aaron.curry@propertyinsight.info we'll be able to get back to in the next couple of days and have some great conversations with you. Myself, Chris or John will call you. We're the guys that look after new investors, and we'll see if we can help, and we'll see if there's a good fit. It may or may not be a good fit. We may not be right for you, but if you are interested, please drop that email with interested on. If you're outside the first 20 and you've not sent it in yet, as I said, there's about 300 people registered for tonight's call. If you're outside that first 20, please send interested anyway, and then we'll get back to you as soon as we possibly can. We will email back, and then we'll get back as soon as we can. For those that were interested in, sorry, just lastly on that, for those of you that's important to do some projections and some goals, we'll actually help you create a property plan. So whether you end up investing with Property Insight or investing yourself, we'll help you create a property plan for that. That's something that you can take forward with your investing, okay? But we only want to spend that time with people that are genuinely interested, obviously, so use interested for that. If you're somebody who hasn't got the money at the moment but would love to be able to go to your joint venture partners and say, look, I'm able to source property for you, I'm able to guarantee, and you want to be able to guarantee all those things I've just said to joint venture partners, we have a product that you can offer to joint venture partners where they put the money in, you do the work to link them up with us, and you get paid out of that. And people who are able to find joint venture money of £300,000 from their joint venture partners will have an income in 10 years of £50,000 per annum from the property that we will source, we will buy, we will manage, we will do up, we will let. For you and your joint venture partner, it will create an income of £50,000 per annum for you if you're able to find joint venture income money of £300,000. If that interests you, then we are running another webinar especially for those people. And just if you can email JV or JV partner to myself, and then we'll make sure you get invited onto that next webinar, and we'll explain it in more detail how that product works. I didn't want to bore everyone with that today, but if it specifically interests you, then please drop that. Okay, lastly, I really, whether you're interested in the Insight Group or not, I'd really love to share with you this free material that we've got. I'm passionate about helping people in property. Hopefully you've seen that passion tonight. I'm passionate about people getting up and getting on with their investment. Too many people are held back by time restrictions, held back by money restrictions, or held back by not having mastery, not knowing exactly what to do and exactly the best way to take things forward. And what I really hope, if nothing else, is that tonight has helped some of you or all of you along that path of investing, and helped some of you to see that there are other ways out there. So please, the other offers are on the screen there, but email, and that's to info@propertyinsight.info. info@propertyinsight.info. Make sure you're putting .info on the end, not .co.uk. But yeah, if you email them, remember there's the free weekly emails that have got fantastic value, the website videos, the free rental pack sells for £97. There's the book there for those that are happy to give us feedback, and there's the leverage and the house price videos as well. Okay, I really hope you guys have found that useful. I'm going to leave that up on the screen for you for a little while, just so that you can oh, excuse me guys, yeah, I'm going to leave that up on the screen for you just for a little while, just so that you can zip any emails across that you want to. In the meantime, if you've got any questions, I'm happy to stay online for as long as people have got questions. So if people, if you haven't got a question, if you could take your hand back down. But if people have got questions, in fact, the best way of sending a question over is if you can just type the basic question in to the system at the bottom. There's a section called chat. Type your question in and ping it across to me, and then I'll pick up the questions individually and try and answer those. Or if you put your hands up, once we've finished with the questions that people send across, anybody with their hand up, I'll unmute you, mute you, and you can ask the question in front of the group that are left. Okay. Really hope you've got great value, guys. Hope you have a great evening, and good luck with your property investing. Okay. I can't actually see any questions coming through at the moment, which is either a good or a bad sign. It means I've covered everything thoroughly, or there's not much out there. I can see a couple of people with their hands up there, which could be accidentally or could not be. So I'm going to go to a question that I can see coming through from Stephen Barker Hall. Yeah, Stephen's question, great question. Stephen's asked the question, how soon would I be able to take income? We have a couple of different models, Stephen. Some of our investors are about long-term growth and about the future. So our model is generally designed, our core model is designed for people who are looking at 10 years plus. And therefore, any income that you could take, people reinvest. However, we do have another model which is designed for people who want income today. And it depends very much on the income you want. So to give you an example, if somebody wants an income, just like the interest return on their investment, so if they put 60,000 in and they want to make £3,000 a year, 5% income on that. So we have a lot of people who are a bit older and maybe already retired that like to do this. They don't need the money, but they want the interest and they grow the nest egg. They'll put £60,000 in. They'll get an income out of £3,000 per year, so it's like they're earning 5% on their money. For those people, in 10 years' time, we haven't grown to £1 million portfolio and 7 properties, but we have grown to 5 properties. And the income they get then from year 10 onwards is £21,000 per annum. So if you want to get 5% return on your money now, or you know people that do, fed up with the banks, they can get that, but at the same time be growing equity in the background, and at the same time be building for 10 years onwards to have £21,000 of income. So I hope that answers your question. But please feel free to ask any more questions along that path if that would help you, Steve. Okay, I can see a question from Valerie coming in. I'm just struggling to open that one, Valerie, I'm afraid. Okay, Azu has asked the same question, so hopefully, Azu, I think I've just dealt with that question and that's been answered for you about the income side of things. I'll try and open up Catherine's. Guys, can I ask you, we seem to be having a bit of problem with the technology, which to be totally honest could be me. I've not got Simon here holding my hand. If you want to send the question as a general question to the entire audience at the bottom and use the screen at the bottom, apologies for asking you to do this, but if you could do that, then I can make sure that I answer the question for you. Okay, let me... I've just been asked the question, is it possible to get a copy of the presentation? I'm more than happy to share a copy of the presentation with anybody. So if anybody wants a copy of the presentation, if you email the info@propertyinsight.info and just say, please send me a copy of the presentation, more than happy to send that out. There'll also be a recording of tonight's call, and we'll be sending that out to people that want it as well. Okay. David just said, thank you very much for a great webinar. Delighted you've enjoyed it, David. That's great. Thank you. I've got a question asking, how do you access your pension for residential investing? It's quite a technical area, and I'm not an IFA, I'm not an expert at it, but we work incredibly closely with a partner that we have in York that has found a mechanism to enable you to use the fact that you've got a pension to be able to invest in residential property. It's quite complicated, so if you can just drop that question on an email to me, I'll make sure somebody emails you back with our core documents that explain how it works, the basics, and then if you want to speak to somebody, you can speak to somebody. So if you can just drop that on an email to me, I'll make sure you get an answer on pensions. And if everybody does that, we'll do that as well. Okay, Jane Child's asking a great question. What happens after 10 years? Will you still look after our properties? Jane, we definitely aim to. We aim to be here forever. I'm building a business. I don't intend to work in it forever, but the business is growing and growing. Each of those independent businesses runs as a business in its own right and attracts its own new customers as well. But yeah, we absolutely intend to be here managing the properties. When we're buying for an investor, we will tend to buy that investor's properties all in a certain area. So let's say it was West Yorkshire. We try and source all their properties in West Yorkshire. So if for any reason they decided they didn't like us, or they wanted to sack us from managing the properties, or they wanted to move forward, they could get rid of us and put another letting agent in place and have that other letting agent manage them. We don't intend that to be the case. We've not had anybody who's wanted to not use Rental Insight as yet, which is fantastic. And that's over the last 3 years, nobody's wanted to go away from Rental Insight. But if you did want to do that, we'll make sure we're sourcing in the similar area for you, so you're able to pick up another letting agent and they can manage them for you. But no, our intention is to be here to manage them forever and to keep helping you refinance and grow. The only reason we promise 10 years at the moment is if a bomb blows up our whole building or we're run over by a bus. We just want you to know that our promise is a minimum of 10 years. Okay. I've got a question here from, no, Catherine, I've just got half a question. I've got somebody asking me, will you buy any deals from sources? Yes, we do. Please, if you're a sourcer and you've been listening tonight, we'd love to speak to you. It's actually Paula and her team that deal with our sources, so you may or may not have come across us already. We are very strict on the rules. We're very strict on what we look at, but we're very upfront with that, and Paula and her team can talk you through that. Again, if you're a sourcer or you've got potential deals that you'd like to offer us, or you'd like to show us your junk leads and see if we can do anything to help you, info@propertyinsight.info, and if you just type a little bit there saying you're interested in offering deals to us, we'd be very interested in seeing that. Okay. I've got a question from Glenn. Glenn, that question's coming up. How long does it take for a 30k income with a 60k investment? Basically, Glenn, that model is designed on reinvesting any profits that we make. So based on reinvesting your profits as we go along, the income of £30,000 per annum would start after year 10. Now that's based on 4% growth. Now if the market grows faster than 4%, you'll get to that income more quickly. If it grew slower than 4%, I don't believe it will, but if it did over the next 10 years, it may take a bit longer, but we'd continue working with you till you got there. But based on very conservative 4% growth and some other conservative things that we put in there, you'd have an income of 30k per annum in 10 years. If somebody wants 30k per annum in 5 years, the investment needed is about 120,000, and we can get to a point where it's throwing off 30k per annum in 5 years. But we always work with somebody individually to work out what's best for them. Lara's got a question. She's saying, am I right in thinking that this is a completely hands-free investment? I wouldn't even need to visit the property. Lara, that is totally right. That's totally right. Basically, you're totally able to visit the property. If you want to go visit it, and some of our investors do, you can. We'll arrange it so you can before you buy it or after you buy it, etc. You know, you can go see it, you can go meet it, check it's real, touch it. But equally, the majority of our investors, they may check it out more thoroughly on the first purchase, but as we're growing their portfolio, they just let us get on with it. You know, our experienced investors who are experienced with us now, you know, that are on their 5th, 7th, 10th deal, we'll send them a property, and sometimes I'll get an answer back in 2 minutes saying, if you buy it, I'll buy it. And that's brilliant. We've got that level of trust with them. By the way, I haven't mentioned, but those people are totally happy to speak with you guys as well. So if any of you were putting in touch with current clients, we've got loads of current clients who would be delighted to speak to you and let you know how they've gotten so far. But yes, so it can be 100% hands-free. We have people who invest from abroad, and they just let us get on with it and literally do everything for you. I'm getting a great question. Can we invest more than 60,000? Yes, you definitely can. We, as I say, we deal with investments from 60,000 up to $500,000. I work with 6 clients per year who have $500,000 to invest. So if you've got $500,000 to invest, I'm involved in all the purchases. I'm involved in all of the business. But specifically, if somebody's got $500,000 to invest and is at that end of the scale, there's 6 clients a year that kind of I mentor and work with, and we do a mix of what I've covered today and some more risky stuff. But you understand the risks, and we do that, and I really help you explode your portfolio. But anywhere between 60 and 500,000 as well. Yeah, we've got lots of investors with different amounts between there. So again, what I'd recommend is we look at things. You don't want to overstretch yourself. You don't want to put too much in and leave no contingency. We always make sure there's contingency in there, and you've got a balanced risk of investing in property and maybe stocks and shares and some other stuff. But yeah, you can definitely invest anything upwards from 60. Yeah. Absolutely great question from David Dugan. Great presentation. How are you different from other investment companies? I think the way that I would answer that really, David, would be that we've got a few unique selling points. The biggest one for me is that we do everything cradle to grave. There are a couple of companies out there that do that. There's lots of companies that will source you discounted property. A lot of those companies send those discounted properties to us as well, and they're in that batch of 98%, a lot of those deals that we throw away. Okay, so for us, it's about really being thorough and upfront with our commitments and what we're looking to buy. We're really specific on what we look to buy. The properties have to meet those cash flow rules. They have to meet the rules on the rental thing. There's so many deals that look brilliant, and then we only get 8 people call from the letting adverts and it gets thrown in the bin. So I'd challenge you to find another company that will be so thorough in checking a deal and signing a deal off. Okay. The second thing is that we do everything. Most companies don't provide the rental expertise or the maintenance in-house, or yeah, they may introduce you to another rental company if you're lucky, but they won't. It's not in-house. It's not all part of the same package. So for us, you'll have one point of contact that manages your whole investment. All the 4 companies that I have feed into that point of contact, who's the person looking after you. They're in the offices going around those four different businesses, beating those businesses up on your behalf to make sure your investment is performing as well as possible and you're getting all the answers you need and everything else. So I think that's unique. And our commitment to work long term with people, there are a couple of other companies out there that do it, but the fact that we're here for a minimum of 10 years, the relationship we build with people, I think really makes us different to other property investment companies. I'd love to introduce you to some other clients that will be able to answer that question as well. And I know that Simon Zucchi and his team have obviously seen us as being very different. Simon gets to come across lots of different property companies that he's recommending ourselves. So I hope that answers to a degree, Doug, but I'd love to answer more fully with a bit more time. Okay. I'm being asked whether we source properties down in the southeast. Somebody's saying, I think it's James, is saying that they're looking at upcoming areas in Medway in Kent. The reason we don't source further south and we stick to the £70,000 to £110,000 bucket, as it were, is because it means people with £60,000 can get started with 2 properties. If you're buying down in the southeast, your £60,000 is probably going to be 1 deposit rather than 2, and it takes longer to gear up and get the investment module working. So for our investors that have got more money, 180,000 plus investors, we do buy some stuff that's more expensive, and we do model some other stuff in. The other thing is, and there's always exceptions to prove the rule, don't get me wrong, and Medway in Kent may be a fantastic place to invest. But the other thing with more expensive properties, as properties get more expensive, the rents normally don't pro rata go up with it. Like I shared the York example, but, you know, the property's twice as much as it is in Scarborough, but the rent isn't twice as much. And that can be a real sticking point. That can be a real problem. But I'm not saying there aren't fantastic investments in the south. That there are. It's just not an area that we do a lot of business in, because, yeah, we stick to a certain model and we make sure our investors get what they want. Okay, but we do have the contact. So if somebody comes and says, this is specifically what I'd like to do, I want to invest £180,000 plus, and I want them in this area for a reason, we'll look at that. The last point I'll make on area, guys, is if you're buying stocks and shares, you don't say, well, I'm from Yorkshire, so I'm only going to invest in Morrison's shares because Morrison's comes from Yorkshire. I'm not going to buy Tesco's. You buy for the best investment and the best investment return. And for me, it's exactly the same with property. There's a lot of benefit in buying locally. If you're managing things yourself, if it's something that you're learning to do and you're going to do it yourself and master it yourself and not have somebody like us do it for you, then there is a lot of benefit in doing things locally and doing it close by, and there's lots of reasons to do that, okay? And Simon's courses and his teachers will teach that. However, if you are getting somebody else to do it, actually it's about the best investment and where you get the best returns. I've got a question from Tim. You mentioned taking money out of pension pots, minimum of 50k pot. Can this be spread across a couple of pension pots? Tim, yes, it can. I'm not an IFA, so what we'd need to do is put you in touch with the experts that we use. that have got this mechanism for being able to release cash out. I personally have 3 separate pension pots. They'll review them all. They'll tell you whether it's worth moving them or not, the pros and cons of moving them. As it turned out with my particular pensions, they said it's worth moving to. The other one, we wouldn't recommend you move. I actually overruled them because I know how much money I can make with cash available for property, and I moved all 3. But a lot of investors would have just moved 2 of the 3 pots. But they'll look at it. They'll give you the best advice. But yeah, if your money's in a pension and the pension could be transferred to somewhere else, then yeah, different pension pots can be transferred into this one SIP. It's using SIPs, but it's using special technology with SIPs. Then Tim, yes, that definitely can be done. So drop me an email. I'll send you some more details and put you in touch with those guys. I've got an email from Mikhail just saying, late to join, is it possible, missed some info, is it possible to have a copy of the presentation by email? Yeah, sorry, it's Michael. Yes, we'll definitely do that, Michael, and I'll make sure we get that across to you. Okay. I've got somebody sourcing in Liverpool that's asking if we'd like some deals. Yes, definitely would. Please get in touch, as I said earlier on. Email info@propertyinsight.info and ask the property sourcing team to give you a call. Put your details on there, and they'll get in touch with you in the next couple of days. How long have we been in business? Great question from Justine. How long have we been in business since this is a long-term venture? I've personally been in business. My property portfolio has been going since 1998, so it's 17 years old, and that was my main core business alongside my mortgage business. The mortgage business, Mortgage Insight, has been in existence since 1998. It's been fully owned by me since 2002, and we've had franchises and other things. We've been registered with the FSA since we could be in 2004. In terms of Property Insight, we very much used to, with the deals that we could source, we used to love buying those deals for ourselves. So myself and my business partner that I run Northern Properties with, that's my property business, which sits separately to all of the Insight Group. Myself and Mark used to buy about 10 properties per month up until the credit crunch. Half of those properties we'd keep in the portfolio and half we'd sell on for profit. We'd put back up for sale and sell again. And when the credit crunch came, we had 20 up for sale at that point, so it gives you a feel of the volume that we were dealing with and the numbers that we were dealing with. As we grew our portfolio, we were also buying and selling a lot of property. So that business, again, has been around for about 7 years. Property Insight is the offspring of that. So Property Insight, in its right as it is now, has been around for 3 years in total, and is but it's a continuation of those 7 years that me and Mark have spent. We're doing exactly what we did to grow our own portfolio, but now we do it for other people. Now, a similar question people ask is, why do you do it for other people? Why don't you buy them all for yourself? Well, those of you that have been around for a while will know that when you've got over 100 properties, it's incredibly hard to get now buy-to-let finance. You know, we've got 15 mortgages with Birmingham Midshires. The maximum they offer now is 3. Similar problems with the Woolwich, with C&G. We're well over the caps of the buy-to-let mortgages we're able to get. So we can still get buy-to-let finance, but nowhere near the volume that we would like to have. So when we hit the credit crunch, we started for the first 6 months or so, the properties that we were sourcing, because we had the mechanisms, we were giving to friends and family members and doing some joint ventures, putting them in their names. But because the volume was so big, we actually realised we could make a business, or I realised I could make a business out of it, and Property Insight grew from there. So Mortgage Insight already existed, been around a very long time. Property Insight sprung out of Northern Properties, that's been around for about 12 years. Maintenance Insight, we've been doing the maintenance for a long time, but Maintenance Insight's only existed again in its legal entity for the last year, and Rental Insight in its legal entity for the last 3 years. Rental Insight came into existence to manage my own portfolio, so when I want to go sit on a beach and not work anymore, there's a business there to look after my properties. So the same people that look after my properties look after our investors' properties, and they manage them in exactly the same way. You know, the same decisions are made, the same decisions on maintenance, on who we put in, exactly the same way that my portfolio is run is how we run our investors' portfolio. Lastly, on the business question, because it's a really valid one, I'm a massive believer in learning. It's great all you guys have come on to listen to me, but I invest a lot of money every year, in excess of £10,000 a year in my learning. Anthony Robbins is a fantastic role model for me. I've been on all the property courses that are out there. I've spent lots of time listening to Simon, listening to guys at Progressive Properties, I've mentioned those, listening to some other great speakers, lots of great speakers on the PIN network that have done fantastic value. And I also invest heavily in my business development, so separate to that money on my own learning, I have a business coach, so despite the fact that we're very profitable and doing very well, I have a business coach that I meet with every week. He holds me accountable and drives me forward and makes sure I'm delivering. Again, he's one of Anthony Robbins' top 12 coaches in the world, and he coaches me on a weekly basis to make sure that my businesses keep performing. So I've shared a bit of background there. If you'd like some more definite background from me and more details, I'm an open book. I'm really happy to share. I'm happy for people to see my portfolio, to see the rents we're getting, to see the bank statements. Not a problem at all. If people are going to invest with us, we need to be an open book, and you know who you're working with. Okay. I've got another question come in. Can I use my pension to invest? I think we've touched on this a couple of times, but yes, there is definitely potential to do that. Depends where your pension is. Depends. We need to check it's worth your while to move that pension, and I can't do that. The pension guys can. But please drop me an email saying, please send me the pension stuff, and we'll make sure we get that out to you and explore that option with you. Okay. Next question, how does your 60k model deal with protection against an increase in interest rates beyond 5.5%? I'm old enough to remember. So am I, unfortunately. Only just, but so am I. Really, really important, this one, and we cover this offline, anyone investing. We stress test our model to 8% interest rates. Okay, so if the interest rate goes up to 8%, absolutely no problem. The contingency's there, the extra money going in from the maintenance and the cash flow, the positive cash flow, builds you a pot in the background. And anybody doing this, whether you invest with us or you invest yourself, I'd strongly recommend that you do this. So we model at 8%, and we model to make sure that it will look after itself and protect itself at 8%. Now, above 8%, you would then start to lose money. So you'd either start to be in a cash flow negative position, and your contingency fund would cover you for a couple of years or a year. It depends. If they go to 15% tomorrow, that's different. But if they went to 9 or 10%, your contingency fund would cover that. You'd have a year or two, and you could make a decision. You could either get out and sell, because if you think the rates are going to go up to 15% and stay there, you don't want to be in property. You should be somewhere else. Or you can decide to manage through it, and the contingency will manage you for a year or two. And the interesting point is, if people look back when the rates were really stupid, they weren't that stupid for that long. They were up at 8% for quite a period of time, but when they went up to 14, 15%, the times that people remember, basically what happened was the rates went to 14, 15%. Let's say they were there for 3 to 6 months. I don't believe it was that long, but they were there for 3 to 6 months. Actually, what was happening in those same years with the property prices, if you look at the house price video that we've got, the property prices actually went up in that same period by about 20% per year. So those people that had the contingency fund in place to deal with the bad interest rates, the government will always work incredibly hard to get those interest rates back under control. They have to sort it, otherwise everybody's in trouble, the whole economy's in trouble. But while they're doing that, you also get great inflation, and you get your house prices going up a lot. So if you've got the contingency in place and you've planned for that time, and you've got the money there to support it, what actually probably will happen is your property may go up 50% in value over a 3-year period, and you'll come out the other end and you might have used up your contingency, but you're back to normality then. You're able to go back and remortgage and release further funds tax-free, and then invest or restock your contingency and invest, or have a lot of money to go spend elsewhere. So the key to these things is to have that contingency in place. Now, do we protect for the rates going to 15% and staying there for the next 10 years? We can't. No one can. And if you believe that that will happen, again, I'd strongly urge you not to invest in property. But if you believe you just need to have a plan, you need to have something there that protects you, well, you're definitely protected up to 8%. I would argue that interest rates are going to go up slowly to get to that point anyway over the next 4 or 5 years, at least. And I would also argue that as the base rate goes up, the banks will be getting more competitive because we'll be in a better place, and the margins will come down that they charge on top. So I think we'll stay around 6 or 7% for a very long time for buy-to-let lending. But if you are worried it'll go above 8% and stay up there, property may not be the right thing to invest in. But yeah, hope that answers your question. Again, if there's more detailed response, just put another question in. I'll try and answer it in more detail. Okay, I think I've covered the questions that are on my board at the moment. So if there's any more questions, I'll just flick through and see what else we've got. Okay, I think I may have some unanswered questions. I'm really sorry to do this, guys, but the technology is playing up a bit. If you've got any further questions, if you'd mind putting them in, and then I can try and deal with them. Or maybe if you just put your hand up if you've still got a question. I think we may have a couple of hands up, so I'll in just a second I'll go to the people with hands up and we'll get them speaking on the line so that they're able to speak. I'm just scanning up the list of questions that I've got in front of me. We seem to have dealt with all of those questions at the moment. I've got somebody saying they've sent me 2 questions. I think it's I think the asker there is Les. Could you send those questions again if I've not answered them? That would be great. Okay, yeah. I'm going to open up the channels so that people, if you put your hand up, anybody with the hand up, what I'll do is I'll put you on loudspeaker. Obviously, don't put your hand up if you haven't got a speaker. But so, Catherine Parsons, I can see you've got your hand up. Was there a question you wanted to ask, Catherine? You're online, Catherine. And David Tyler, I'll open yourself up as well, David. Is there a question you'd like to ask, David? I might be springing this on people, so if you've got your hand up, if you can make sure you're able to speak, and then I'll click on you and make you able to speak in front of the group. I've got Catherine and David with the hands up. Just going down. Okay, Mag, I can see you've got your hand up. Have you got a question to ask, Mag? Okay, and I've Michael Howman, I can see you've got your hand up as well. I can hear you, speaker, but I can't hear you speaking. I've got another question that's come through on the questionnaire slide. I've got somebody asking, when somebody calls and asks for a woman, how do you say that she's not around? That one, to be honest, is really easy. Great question, but yeah, so if someone rings up and says, hi, is Paula there? I'll just say, I'm really sorry, she's not available right now, but can I help you? And they've rung, they're ready to share, they're ready to speak, and they'll start to speak to you. They'll start to speak to you. Oh, I was just ringing about, I've got this leaflet. Great, I can definitely help. I'd love to speak to you. So it literally is as easy as that. Just let them ask for Paula. So if you're answering the phone, you need to not answer it with your name. You obviously need to answer it and say, hi, it's Property Insight, or hi, it's Fred Blogg's company. How can I help? Is Paula there? No, she's not. And then you get into things like that. Okay. Leaflets, I can see. What's the best wording to use to attract a motivated seller? There's lots of different views on this, David. If this is David Tillier. David, if you drop me an email with that question, what I'll try and do is link you up. Simon's got a couple of brilliant courses that he runs where he shares some of these leaflets with you, and I'd really, really strongly suggest going on those. I really would. There's a couple of really great guys out there as well that are good at leaflets. A guy called Glenn Armstrong he's not somebody we directly do business with, but Glenn has been using leafleting for a long time. In fact, he got so good at it, he decided to set up a leafleting company. So there's a guy called Glenn Armstrong that you can, if you Google him, you'll find Glenn, and he's got some free stuff online on leaflets as well. But yeah, feel free to send that something over. It's personal and friendly and straight to the point. But send something over and I'll try and help David. How can you guarantee to buy houses when you've already mentioned that 98% don't meet the strict buying criteria? Great question from Melanie. The reason I can guarantee that, Melanie, is that we limit the number of investors that we work with, so we don't take on more investors in a month than we're able to source for. So that's the first thing. We're not out here collecting lots of people's money. People don't give us their money. Their money gets put with a solicitor in an escrow account, a solicitor of their choosing, somebody that they've chosen, not our solicitor, and the money's in the investor's control. So I didn't cover that before, which is a really important point. So it's not in our interest to get you interested, spend a lot of time talking through what we do and how we do it, and then not be able to give you any property, because we will have wasted a lot of time explaining what we do and getting you to the point of being ready to work with us. So we limit the number of investors that we work with, and that means that we know that we can go out there and source 20 properties a month to all our strict criteria. We know that through the mechanisms that we have in place, there's 80 companies out there that we work with, companies stroke individuals that we work with, and there's all our own advertising and marketing we do. We know that produces enough volume of property, of great quality property, to our rules that we're able to put enough in front of you. So I hope that answers your question. It's by limiting the amount of investors. Okay. I'm really sorry, I've just got a message from Valerie saying, can I put the sound up a bit, please? So I'm sorry if there was problems with sound. That's just come through. I've got a message saying, what do you do with your 98% of dead leads? Which is a great question. We get asked it about 8 times a week. Quite literally, that's not an exaggeration. We're just in the process of working to create a website. It's probably 3 to 4 months away from being in fruition. And we need to work very closely with the sourcing companies we work with and individuals. But we want to create a website where people are able to send their junk leads. I'm working in conjunction with Simon on that. Simon does, again, I keep saying this, but he's just a fantastic educator. We're great at doing it for somebody. If somebody wants to learn to do it themselves, Simon and his team are just superb at it. But I'm working with Simon. He's got a lot of people on his mastermind courses and a lot of people that attend his courses and his PIN events that do source deals. And we want to create a forum where those people are able to put those up and also put up their junk leads. And the system will help them to decide, through some of the mapping that Simon does, the system will help them to decide whether that should be an option deal or a cheap deal that's sold, bought for cheap, or what the best way is to deal with that vendor to get the best outcome for the vendor. And the website will do that and then help the sourcers market them out to other people. So we're still 3 to 4 months away with that, and with websites and technology it could take longer. But that's where our junk leads are going to go at the moment. Out of respect for our sources, we're very upfront and straight with them. We answer them normally within the hour to say whether we want it or not. With our key sources within 10 minutes, and then we go off and do our testing and measuring, and the sources know that we do that, and they give us the credence to do that because they know that provided it does stack up, that we are very serious and we crack on and do what we've said. But yeah, junk leads at the moment, that's what happens. One of the things I haven't covered on today's webinar, by the way, guys, is being ethical, and Simon covers this on his PICS courses, which is his one-day courses. But for me, it's categoric in any business transaction that you're transparent and things are a win-win. So our vendors, we deal with them in the best way we possibly can. If there's a better way out than selling the property, so i.e. they could refinance and they never realised, or they'd be better to move the mortgage into somebody else's name or what have you, we will work with them to find the best solution for them. We'd rather they didn't need to sell to us at a discount. If they can find another way to sell, we'll ask them the question up front. If you're not in a rush, use a great estate agent. Try and sell it for 90% of what it's worth through the estate agency, and don't take such a cut. So we work ethically in that way. Just as importantly, our tenants are treated in the same way, and this is a key reason why we run at 98% occupied. 40% of our tenants are what we call lifers. They're people that say to us, I'd like to stay here for life. And it's because we treat it is their home. These are the words we say to them when they move in. This is your home. We're not going to come and pest you. We're not going to chase you. If you don't pay or there's problems, we will be round, and we'll be round very quickly. But if you pay properly, you pay promptly, you treat the house with respect, it is your home, not your house that you're letting. It's your home. If they want to paint the walls yellow, we let them paint the walls yellow, as long as they're not doing it black. If they want to change something, we let them change it, and that way they feel like it's their home. What then happens is when the doorknob breaks, you don't get a phone call saying the doorknob's broken, can you come and fix it? And you get a £30 call-out charge for your handyman to fix the doorknob. They just crack on and fix it. When they want a wall painting, they don't ring you to paint the wall. They get their mate Bobby to come in and paint the wall for them. So we do it for business reasons as well, and our investors benefit from those business reasons. But you need to deal ethically. You need to manage business ethically, and I'm a massive believer in that. And that's how we work with both the properties that we buy and also the properties that we're going to let out. By doing that with everybody across the stage, if you deal with property sources, if you deal with solicitors, if you deal with mortgage companies, if you're ethical and upfront and honest at all times, and most importantly, you're transparent. So any deals we buy will show you what profit we're making, and an investor will see what profit we make on a house. They'll see what's in it for us. And if you're transparent like that, people will gain that trust in you, and they'll work better with you. You'll create win-win relationships. Now, do people sometimes lose, i.e. us or the tenant, because it doesn't quite work out right? The tenant moves in and it wasn't a dream house and they end up moving. Yes, that happens. Not everything's perfect, but we guarantee the results that we get for our investors in what we do. So, yeah, hope that helps. You can tell I'm quite excitable and I'm getting on one, but I'm glad a lot of you are staying with me. So I'm hoping I'm still adding good value. I've got a message. I've got a message asking me to send an email to Simon. I'll make sure that gets forwarded by the admin team tomorrow, David. Simon's on holiday this week. Right, I'll go back down to the bottom of the list. I've gone back up. I'll go back to the bottom because I think there's some more questions popping up. Okay, a question from John Bell. Apologies, John, I've not answered this. It says, where are you located? I'm personally located in Scarborough, North Yorkshire. So I'm sat in it was sunny Scarborough. The business obviously runs in the areas that I showed you. Our team are on the floor, so Chris and John, who work with me dealing with investors, you know, cover the whole country. So if you want to talk, if you want to come and visit us, people are absolutely more than welcome. We love to see you. But if you want to get talking to us and find out about us, we'll generally use Skype or talk to you on the telephone. And you know, if there's a real genuine interest there and things are looking good, you need to get to meet us. We'll come and see you. So, it's you know, it's not a problem where you're based in the UK. We'll work with you with a lot of clients in the south, and yeah, and we're often down there with the links that we've got with Action Coach and some of the independent financial advisors, etc., that have networks across the country, and through the PIN network. Again, we get to work with people right across the country. But base for the company and head office is in Scarborough. Great question from Pradeep. Which areas and cities do you invest in? I covered the areas on the slide, so hopefully you saw that slide. If not, you'll be getting a recording, so you'll be able to have another look at it. In terms of specific cities, what we like to think, and I'm pretty sure this is correct, what we like to think is that we understand the market well. We understand the marketplace, we understand what's going on, and we get to hear about it before most investors. So for example, at the moment, and sorry if you're buying in Durham, but we wouldn't buy a property in Durham. There's been too many redundancies in the area. That's put pressure on people moving out, so there's more properties up for sale than there should be, and the housing market's dropped, and there's also more people trying to rent the properties, so that getting rented is more tough. Would we have bought there a year ago? Yes. And will we buy there in the future soon? Yes. But right now, we wouldn't buy in Durham, for example. We wouldn't buy in Hartlepool. I think this will change shortly, but about 6 to 9 months ago, the banks did an experiment and released some repossessed stock en masse in Hartlepool. They were doing it to test the marketplace. They were doing it to test how badly it would affect other house prices. And what happened was the bottom end of the market took a sag. Now, will it come back? Yes. Will it catch back up? Yes. But I wouldn't invest right now because I believe that there'll be some more repossessed stock actually in Hartlepool itself released to test in the same way. So the snippets like that, because we're professional at it, because we do it day in, day out, that we would get to pick up that an investor wouldn't. In terms of picking which cities are best, though, it's really about meeting those strict rules. If an investment meets all the strict rules that we've got, then and we're getting lots of people wanting to let in that area, then we're probably going to be buying it unless there's a really strong reason like that Durham and Hartlepool one that I've shared with you. There are brilliant investment opportunities in every city, in every town. We can't predict exactly where the capital growth will be. You can do some work on that, and you can invest in certain areas if you're very specialised and very focused in. But what we'll do is we'll buy for good capital growth. We'll buy in places where we're going to get that capital growth, but most important in the meantime, the cash flow. Do you do buy-to-let on HMOs? Les Elms, thanks for that question. Richard in the Mortgage Insight team does. We can get some buy-to-lets on HMOs. There's not a lot of lenders in that market at the moment. We bought one recently and had to use commercial finance. But although Mortgage Insight don't do commercial finance, they've got the contacts. We can put you in touch with somebody who is very good at it. It's an incredibly difficult market to get finance in. If you're talking HMOs in terms of LHA strategies, and forgive me if you don't understand the terms, but just for Les, LHA strategies with ex-council properties, things like that, or town centre houses, there are ways that you can use traditional buy-to-let finance, and again, just get in contact with Richard. It depends where you are in that investment cycle. Also, another question from Les, great question. Can you provide me with potential deals that allow me to manage the rest of the business myself? And if so, what are your fees for doing this? Basically, we're not a deal provider as in, here's a deal, do you want to buy it? We don't want to work with people who just want to source one deal. We want to grow portfolios with people. We want to work with those 8 investors a month and grow them real valuable life-changing portfolios that will create them an income. There are plenty of deal sources out there in the marketplace who will throw deals at you and do a very good job of what they're doing for you to then work through and decide if they meet the rules, etc. If you're saying, can you source the property, make sure it meets all your rules, make sure it meets all your criteria so I know I'm buying a great property, you may or may not want us to do the maintenance, and you may or may not want us to manage it. From a rental point of view, yes, we can definitely do those things. And if the maintenance cost is £3,500 for that property, that's £3,500 you wouldn't need to give to us to do the property up, because you'd be able to keep that for yourself. In terms of the Rental Insight charge 10% plus VAT for the rental service that they offer. So again, if you choose to manage the properties yourself, you save that money. You don't need to pay it to Rental Insight. So there's absolutely no contingency that you will use Rental Insight to manage those properties. If you want to manage the maintenance and you want to manage the properties yourself, you can, and we'll work with you to build a model. If I've not answered that fully, Les, then please get in touch and we'll have a further chat about that. Okay. We've got the interest rate question again, which we've already covered. A few thank yous, which is lovely, thank you. I've got a question from Catherine, which is half full if the investment was. So if you could send that again, that would be great. Just scanning through all the questions that we've got. Stephen Barker Hall, come back to me. Would that be paid monthly or yearly? Stephen, apologies you've had to wait so long for the answer, your second answer. I think Stephen asked earlier on about when the income would come, the £30,000 per annum. The income from the properties, you get rent paid into your account by the letting agent on a monthly basis. So any rents that are collected, minus any maintenance costs, go into your bank account, held in your name, your rental bank account, and the mortgages come out of that rental bank account. We strongly advise it's a separate account, so all the investments running through it, and you'll be growing up your pot for the next investment in that bank account. That's your money. So if you decide at some point you'd like to take 3,000 of that and have a holiday, or you'd like to use that as we're going along, you can do that. It's your money, and you can do as you wish. Obviously, the less you reinvest, the slower the portfolio grows. In terms of profits in the future, you'll get your profits from your rent. There's also refinancing. So as we refinance the properties and use the leverage that I talked about earlier on, that will produce lumps of money. Some of our investors will say, well, I won't want to take any money some years, and other years I'll want to take more, and then they can take it back in lumps. Others will want to drip feed it, so we'll end up with the lumps going into that rental account, and they'll have a standing order coming out for £2,500 a month because they'd rather have it on drip feed. So we manage that with each individual. It can be managed so it comes monthly or yearly, and there's different pros and cons which we'd run through with a specific individual because every individual's finances are different. I hope that answers that, Steve. James Burt, as well as the services you offer, do you do the standard type of sourcing, i.e. BMV for a fee? I might have missed this at the beginning. I think I've covered this, James, with somebody just now, but no, we don't really. We're not into that game. We want to get fantastic relationships with people that we can take forward, and on that basis, we don't invest in that kind of way. There are brilliant sources out there. There's lots and lots of them, but you won't get that thoroughness that we will do, which means that 1 in 60 goes forward. But yeah, I hope that answers that question. Great presentation. How are you different from other property investment companies? We've answered that one. Right, 1 million portfolio builds up over how many years? Based on 4% growth. So if we get 4% growth, that £1 million portfolio will build up over a 10-year period. Now, I don't have a crystal ball, and I can't project. I don't know exactly what the growth will be. We do have a system, a very, very complicated spreadsheet, so we are able to model based on your assumptions. So when we're speaking with an investor personally, if they say, well, I've got £120,000 to invest, but I think the market will only go up 3%, or they think it will go up 3% for 6 years and then 10% thereafter, or what have you, we can put that into our model and we can show you what the outcomes will be. What we do is we work based on only 4% growth. So we model conservatively. We model because we believe it will be higher than that. The average was 11.3 for the last 40 years and was 7.9 for the last 80 years. So there's every reason to believe it will be above 4%. But we model based on 4%. And based on 4%, it would take 10 years. Neville says, hi, you know you've talked about 21,000 in a few years' time. How are you able to offer this in that the markets are all over the place at the moment? Neville, that's back to the same point I was just making. We do some basic modelling. So all the assumptions we make are based on 4% property growth. If you believe that the property market is not going to grow, then I'd really strongly challenge you to think about whether property investment is right for you. There may be better places to invest your money. You can go learn about the stock market and make more profit there, or invest in other things. If you feel comfortable that property is going to grow 4% per year plus, then I would say that property is a great thing to get into, and then hopefully you choose to use us, but you may choose somebody else. But if you don't believe that you're going to get 4% per year of growth in property, I'd really strongly encourage you to think about other alternatives and other ways of getting your money working for now, until you reach a point where you think it'll be higher. Okay, I've got a question coming in. Hi Aaron, my first time investor looking at HMOs unlicensed within East North London using JV and options to finance and manage it. We're focusing on 2 properties this year with a net positive cash flow of £1,000 a month. Currently managing 2 other properties with even higher capital outlay. Is there something I can do with property inside? Current restrictions to 60k capital outlay. Yes, there definitely is. Please, if you can email the JV thing, so if you can email aaron.curry@propertyinsight.info, I'll just bring that back up on the screen, and you can type JV in there. Then yeah, let's have a really good chat, because I'm sure there's some stuff we can do. If you're attracting joint venture investors, we can help you attract more of that by providing the experience and expertise in the background that gives them the confidence. What stability models are you using? That's a question from Neville, if any. I don't quite understand the question, Neville, so apologies. It might be we need to have a direct conversation. Yeah, we budget for up to 8%, so we allow for the interest rate going up to 8%. We budget for the mortgage interest rate being higher than we're able to get, so that provides extra cash flow and extra protection there. Yeah, don't fully understand the question, so if you can come back with more detail or drop me an email and I'll give you a call, we'll have a chat, that would be great. Kathy Corn, what would 30k per annum be in real terms in 10 years' time, please? Kathy's now left, but I'll answer the question while I can. Basically, it depends on inflation. It depends on where the inflation goes and depends on where things are. It's the equivalent in today's money of about 22,000. But it really does depend on inflation. I could have twisted that to make it sound like 25. Somebody could twist it the other way and make it sound like 15. So it's the equivalent of about £22,000. But again, remember, we've been very conservative. So if the rates go up at 5% instead of 4%, you know, you'll be up to 30% in real terms, real money. If the rates go up at 7.9%, the prediction is £60,000 per annum of income in 10 years' time, which would give you a real value of about 44,000. So yeah, but based on very simple numbers, about 22,000. Glenn Murphy, 60k and how long to get 30,000 per annum? I think we've covered this one, Glenn. Apologies if we haven't, but it's a 10-year period, and I can see Glenn's left, so I'll speak offline with him. Somebody's just asked if I said we were going to send the audio out. Yes, we will be doing. The audio has been recorded, and we'll make sure that gets sent out to everybody in the next few days. I've got a question coming in from Robert. Do you do any property mentoring as well for more hands-on investors? Robert, yes, I do. Obviously, I'm a busy guy, which I'm delighted that I'm a busy guy, but I also enjoy my fun time and my own time as well. But I'm always interested in working with people. I'm always interested in helping people get on with life and business. So I'm more than happy for you to again, just drop me an email personally. My personal email is on the screen there, and mention that, and then we can have a separate chat about that. It may be that I can help. It may be that I can introduce you to a couple of other great people who could be great mentors for you and kind of do that day in, day out. But it may be I'm the right person. So yeah, please get in touch. Please get in touch. Les Elms, who do you use as your main mortgage providers? There's a whole buy-to-let market out there. Once the property's been owned for 6 months, we can refinance onto. We can refinance onto any deal. Often we'll just use further advances at that point, and we'll refinance after 2 to 3 years. So we use every lender out there. The Mortgage Insight team work with people that will deal with brokers, but they deal with direct deals as well. You know, we're working for our investors, so it's about getting the best possible deals for them. And we work with lenders who are comfortable with how everything works. So 2 of the big providers at the moment, I've mentioned TMW a couple of times. I've mentioned Birmingham Midshires. Woolwich have some great products. Coventry have some great products. It really depends on the individual and what the individual circumstances are. People like Platform have come back into the market. Sorry, Paragon have come back into the marketplace. Kensington have some okay products, but they're great for the right people and the right instances. Oldham or Commercial can be fantastic. Somebody mentioned HMOs earlier. It might have been yourself, Les. So there's a whole host. The mortgage company, a whole of market, and they deal with direct deals as well. Do you not invest in Devon? Have you any plans to change this? We invest anywhere. I think I've answered this question earlier, but just to be absolutely clear, apologies if I haven't been. With our current model, if somebody's investing 60,000, we'll invest in areas where the properties are valued between 70 and 110,000. So we tend to focus on that kind of demographic and that kind of marketplace. If somebody is investing 180,000 plus, then we will look at more expensive properties potentially in different areas. So I've got to say that in our criteria, in the 70 to 110 or 120 market, we incredibly rarely get offered Devon properties. No, currently we haven't bought any properties for our investors in Devon. Would that change? Yes, if we got some great properties down there that were great for our investors. We do have networks down there and we can put the maintenance and rental teams in place. It would take us some time. But yeah, so if you're talking from a sourcing point of view, would we be interested in talking to you? Yes. If you're saying, I really want to invest, but I only want to invest in Devon, then please do have a chat with us. Send the interested email in. But we'd need to have I'm not sure it would fit the model properly. And that's what concerns me there, David. James is asking a question, will I be at Simon's boot camp? James, I'd have absolutely loved to meet you there. Unfortunately, I won't be. There was a bit of a mess up between me and Simon, and I was due to be speaking, but I'm actually on holiday, so I'm not going to be there this week. I know it's going to be a fantastic event. I will definitely be at the next one, but I'm not there. There's a very strong chance, I believe, that Chris Fordy, who is my business partner in Property Insight, I believe that Chris will be at the boot camp on one of the days at least, so you could pick up with Chris there. I've got another question coming in. Hi Aaron, brilliant webinar by the way. Is there any reason why you are adverse to investing in the London area? And that's Rex from East London. The problem at the moment, Rex, for me is that we don't get, well, there's two problems. One is the one that I've touched on, that if you've only got £60,000 to invest, that's one deposit, so it's difficult to get going. It's difficult to get your portfolio moving. So I recommend going for a couple of cheaper properties to start with and get the portfolio moving in that way. The second challenge with London is that there are a lot of people who want to invest in London. There's a lot of foreign investment in London. Now, there's good points to that, which I'll come to in a second, but the problem is it's very hard, therefore, to get good, genuine discounts on the properties. You may get 10% discount, 5% discount relatively easily, but to get a genuine 15% discount in London is quite hard work. And that for me is the biggest reason we don't invest in London, because you lock in a lot of profit with a discount, and that's what enables you to refinance again in a few months and grow your portfolio. If you're only buying one, you're not so worried about the discount, but if you're buying lots, it's really important. The great thing about London is the capital growth. You know, there's some people that have got phenomenal investments, properties that are near the Olympics they bought a couple of years ago, absolutely brilliant, and they'll make some great profits this summer, and they'll get some good capital growth. So I'm not saying don't invest in London, but it's not our model, it's not what we do, and it's not what I'd recommend someone does with only £60,000 to invest. If you've got $500,000 to invest, it's a different story. Can you, Chris, my business partner, has just flagged up a question that I haven't covered. Can you manage my existing buy-to-let properties? Yes, we definitely can. So some people bring their portfolio to us. It's got to that point where it's hard work. They're not enjoying it anymore. They may only have a couple of properties. They've tried it. It's not been much fun. Or they might have 10 or 15. Rental Insight will, and Property Insight will pick up not only the management on the day-to-day basis if you want them to and bring it all under one roof, but they'll also pick up the kind of reviewing and monitoring and giving you best advice on the best way to gear up and invest further and do some other things. So, yeah, the Rental Insight and Property Insight team would be delighted to help with any current portfolio questions and issues, as well as helping people who are investing for the future. Obviously, those people that have sent us the interested email and that are actually genuinely interested in working with us, we'd be delighted to help with any current portfolio queries as well. Would the properties be spread out, or could they be specific to one area, but through being more specific, will this take more time? Brilliant question from Kay. Kay, basically we try to grow somebody's portfolio in an area. So now I've got one particular investor who wants all the properties in Skipton. And for those that don't know, Skipton's probably got a population of 40-50,000. Apologies if I've got that wrong. It's in North Yorkshire, near Keighley, and it's taken us longer to source their properties than I would have liked. I was very upfront with them. They knew it was going to take longer, but because they were being really specific, they wanted them on their back doorstep. It's taken longer. Generally, if you give me an area like West Yorkshire, South Yorkshire, if you're comfortable for it to be, them to be within a 30-mile radius of each other, at the moment we fulfil people's orders within. We guarantee to get the first 2 properties in the first 6 months, but actually we normally buy them within the first 3 months, and often a lot quicker than that. And so it won't really hold you up. It depends how specific you're going to be. If you're going to go for a big town like Sheffield, shouldn't really hold us up very much, but it'll hold us up more than somebody that's got a 30-mile radius, I suppose. I will not, and categorically will not, put deals in front of people for the sake of it to get an order fulfilled, as it were. So the guy in Skipton has had to wait, and I've said, look, when we've got it, but I'm not going to show you dross instead, or I'm not going to give you something that isn't quite to the rules. And it's great that we're so transparent with our rules, because people would know if we were doing that anyway, because we told people up front what that's going to be. Okay. Hope that answers that, Kay. Do you think it's possible to get 30k per annum in 1 year with JVs, in my expert opinion? Depends where the question's coming from, Glenn. The HMO model is not something that we specialise in. Okay, I've got HMOs. It's not something we specialise in for our investors, and it's not my preferred option. There's a lot of work with the HMO model. If you go and find JV partners willing to put up a lot of money, and you go do HMOs, could you create that income in year 1? Yes, you probably could. And I've met people who've done that. If you cut the JV deal in the right way, could you create that income in year 1? If you're buying with discount and your JV partner doesn't expect any discounts, and you have us source 3 houses for you with discount, and then we refinance them because the JV partner's happy with that, and you take the cash and he's left with the property, would that make you 30 grand of income? Well, yes, it would. So there are ways, or maybe 4 houses in that example, just to be straight. So are there ways to make 30 grand per annum in property with JV partners? Yes, there categorically are. There definitely are. But do you need to develop some expertise? You definitely do. The biggest thing that I see at the moment going to property events is people being told that if they haven't got money, to get involved in JVs, and it's exactly the right message. But the thing that's missing for a lot of people is the how-to, the what to do next. And the JV product that we've got, where we work with JV partners, we've actually designed that specifically for that target market, specifically for those people that have got time to go out and find JV partners, but don't necessarily have that expertise level behind them that will attract a JV partner. If a JV partner is going to give you £100,000, if you can show a lot of experience behind you, if you can show you're working with experienced people, you're far more likely to attract it. For those people, we also run a webinar once a week, and people can come onto that webinar. All the JV partners we're working with come on it, and we share tips and ideas and mechanisms, and people share ideas and solutions on that webinar. So if you're asking that question, Glenn, because you're interested in attracting JV partners, that may really be something that can help you. Getting some fantastic feedback. Thank you so much, guys. Glenn's put another question in there, but it's saying that he's left, so I'm going to leave that for now, Glenn, but please get in touch if I've not covered that, or flag that question back up if you are still online. I'm getting a question, is it possible to invest with us on behalf of a limited company, not a person? Yeah, great question. Yes, it is. We do. People can invest through a limited company. Yeah, it's a whole other webinar subject, whether you have a limited company or not. I personally don't invest through a limited company. I did with my first 5 properties because the accountant told me I should, and then I learned a lot of lessons after that. But it is possible to invest with us through that. The restriction is that the lenders normally will only gear to 70% lending on the loan to value instead of 75. So with that in mind, you can't grow the portfolio quite so quickly. Doesn't have a massive impact. Slows it down a bit. But yes, you can definitely invest from a limited company, and we have a couple of investors who are. Would you let me know your junk leads as well, as I also flip as well as rent out? So Les, as I said, we're designing a website for that. So we don't at the moment give them out to anybody, but yeah, we'll definitely keep in touch with you on that as we progress that. David Walworks asked me, do you get involved with HMOs and multi-lets? From a point of view of HMOs is such a broad subject. I have a number of HMOs personally, and they range from 9 people that live in an old B&B that's now an HMO, and the homeless support people in the local area use that property a lot, and we have a great relationship with them. We have blocks of flats, we've had some student lets. There's some people that are absolutely brilliant at those, and they can be great investments. They're not what I do, because that's not my area of expertise, but they can be great. We are developing an HMO product that will come down the line. We're working closely with Paul Preston at the moment, who's one of a great speaker on the PIN network, and we're developing an HMO product. But it's a bit of a way away yet. Do we do LHA strategy multi-lets, the kind of stuff that Mike Frisby teaches? And if you've not come across Mike, he's great. If you Google Mike Frisby, F-R-I-S-B-Y, he's brilliant with LHA rents and maximising the LHA rent you get from your property. He also talks on the PIN circuit. Yes, we we use those kind of strategies in what we do. We never promise those strategies within the properties we buy for investors. And the reason we do that, I don't want to overpromise and underdeliver. So if the rules change and we're suddenly not able to get those kind of rents, we don't want to promise people we can. So we'd rather show them the lower figures based on it being a normal house, flag up that there's the opportunity, and then we'll do the opportunity while we can. And if it stays around forever, great. If it doesn't, so be it. So I hope that answers your question, David. If you need me to be more specific, please come back. Are you sourcing property in Newcastle? Mag's asking. Yes, we definitely are, Mag. In fact, I think we bought a property today in Newcastle for somebody. So, yes, categorically we are, and up in that area. I'm being asked, I'm buying a house in Kings Lynn. Can you get me a property below market value? Is Kings Lynn a good area to invest in property? Yeah. That's quite a specific question. Is Kings Lynn a great area to invest? Without going and researching it thoroughly myself, I wouldn't know for definite. The property sourcing team we have would have a good idea. I'd need to understand more about whether it's a house you're buying for yourself or whether it's a house you're buying for investment purposes. If it's for investment purposes, I'd want to understand it. Is it specifically in Kings Lynn for a reason, or could it be anywhere? So it'd be great to understand both of those questions, and then I may be able to answer you in more detail about Kings Lynn. Do we source below market value properties and get them offered to us in Kings Lynn? Yes, we do. Can I promise I'll have one tomorrow? No, I can't. So I don't know if that helps, but come back with a bit more detail and maybe can help you. Catherine's asking me, do you think, and apologies Catherine, I think you've waited a long time to have this answered, do you think that investment in southern property is too high generally for the return, 60k products aside? Catherine, it varies. I do believe that there's some great pockets down there. I do believe that there's some great pockets. The basic calculation that we always do when we look at an investment property is we take the rent that we can get, and the way that we work out the rent is we look at LHA rents, because we know that they're in the 30th percentile. So out of 100 rents, they're the 30th highest, so or 30th to being lowest. So they're below average. So we take the LHA rent and we assume we can get an extra £20 on top a month because we can pay some top up. But we use that as our rent figure. So even if we know we can get more rent, we use that as our rent figure. We knock off the average maintenance, which for a 3-bedroom property is about £80 a month. We knock off the buildings insurance, and we knock off what the mortgage will be at 75% of full market value. So if it's a 100 grand property, regardless if we're getting with a discount, we look at a 75,000 mortgage, and we work on 5.5% at the moment. So we knock off the mortgage, the maintenance, the insurance, and we knock off 10% for the letting agent, because whether you're going to manage it yourself now or not, you still want to buy the best deal. So knock off 10% for the letting agent. If you get to keep that, great, that's a bonus. But if you're paying a letting agent, you need to manage it. But either way, knock it off. And after all of that, you need to be left with £50 per month if it's about a 100 grand property. If it's a 200 grand property, you need to be left with £100 a month. Okay. And that's to build your contingency and buffer to account for voids. So I'd do that equation. If that equation stacks up and you're being left with that amount of money, then it's not necessarily a bad area to invest in, and it could be good to invest in the south. But if it doesn't meet that equation, don't buy it, because there's hundreds, thousands of properties that do that you can go and buy instead. Okay, same with discount. Don't be really pleased you've got 10% discount and think, well, I'll buy it because I've got 10%. There's loads more out there at 20%, so why not go get one at 15 or 20%? Will mortgages be arranged in my name? James, brilliant question, thank you. Will they be arranged in my name? And at 58 years old, does that affect possible returns? First of all, categorically, the properties are owned in your name, and so are the mortgages. So yes, the properties will be in your name, and the mortgages will be in your name. They're your properties. In terms of, which means you can sell them when you want to. It means you can take control of them when you want to, and if you wanted to, you could sack us and take them over when you want to, and that's totally achievable. In terms of the age situation, the buy-to-let lenders, the majority of them lend these days based on the rental income rather than your personal income. There are lenders out there, not many, but there are some lenders out there that will lend to people that have no personal income whatsoever. Okay, they purely look at the rent on the property, and they want the rent to be 125 or 130% of the mortgage payment on interest only. Okay, so you've got those lenders. If you've got 10,000 of income, more lenders come into the game. Get to 25,000 of income, more lenders in the game. And if you're 35,000 plus of income, every lender's involved. The lenders these days are comfortably lending up to age 90. So I can get mortgages for people, the Mortgage Insight team can, and any mortgage broker can get you a mortgage to age 90 without too many difficulties. So for yourself at 58, you've got 32 years of investing without even worrying about it. There are structures that you can use after that, and if you're getting to that point, you need to be doing inheritance tax planning and other things as well. So there are structures where you're gearing, sometimes you can't borrow 75%, you can only borrow maybe 70%, but you start to use commercial finance instead, rather than buy-to-let finance. But right now, there's buy-to-let mortgage to age 90, and we're in a really bad way with the mortgages. There's not as many out there as there will be in another couple of years. So, yeah, absolutely no problem at all. We can get the mortgages in your name, you can be investing, and you can be investing for the long term, for your future and your kids' future. Thank you very much, getting good compliment there. With £60,000, £70,000 invested with joint venture, how long to reach 25, 30k annual income? Great question, Glenn. Right, basically, if somebody goes out and gets a joint venture partner, okay, we work with different people in different ways. Some of our people want money today, right now up front, so they introduce us to other people with money and they take a commission for doing so. Okay, a lot of our independent financial advisors do that. They know that their clients want to invest in property. They think we're a great company to work with. They introduce those people to us. If you are somebody out looking for joint venture partners and your joint venture partner has got £60,000 to invest, the general model that we tend to work with is that they present it differently to how I've presented it today. So they have a full set of slides and everything else, and we train people and what have you. And we get to meet you, and you get to come around the offices and see how we work, because you don't want to promote it if not. But then what people do in very basic is they'll go out, and the offering they make to their joint venture partners is 60 grand in, gets you 20 grand a year in 10 years time. It's very transparent, so they'll say to the joint venture partner, you're going to get 20 grand of income, I'm going to get 10 grand of income. The 30% growth in the first year is given to the joint venture partner with cash. So immediately their 60 grand investment grows to 80 grand and the quid's in. And then from there, the equity growth is shared kind of 66%, 33% between the joint venture partner with money and you as a joint venture partner that has found them. So when you get to 10 years' time, if they've put 60 grand in, they get 20 grand a year, you get 10 grand a year because you own a third of the portfolio and you get a third of the returns from it. As I say, we run a separate webinar on that. I really don't want to spend a lot of time on that right now, but I'd be delighted if you email JV to myself. I'd be delighted to speak to you more about that. Just to answer, if you were wanting to get to 30 grand of income, that means in 10 years' time, that means finding 3 JV partners now. Yeah, good question, David. Some people say the economy will flatline for another 10 years. What's your opinion on this? I don't have a crystal ball, so please don't take my projections and take them as gospel. I can only say it as I see it. I think the economy is in a real mess, and I think the economy will continue to be in a mess for a while. What I do know in property is that there's a real pent-up, there's a real pent-up desire for people to move house. When you look back in history and you look at periods of time where property hasn't gone up in value, if you look back as historians would, property normally, if it's in the slump, even in the worst instances, the slump might last 7 to 10 years. Now, what you have to remember is a historian in 30 years' time looking back at now, the prices now are about the same as they were in 2005. Okay? So you could very easily argue the slump has been going on for 7 years. We actually went up to a bigger peak than we should have done before it went down, and then we went down more fiercely because we'd gone up too far. And the reason we went up so fast and further than we should have was because mortgage lending got stupid. And the reason we went down so fast is because we'd gone too far. So we had to come straight back down with a bump when mortgage lending stopped. But the historian looking back, who's just looking at history and trends and everything else, will say, well, from 2005 to 2012, yes, there was a peak and a trough, but basically properties were the same value over that 7-year period. So has the mess that they've caused mean that will last for longer? Yes, I believe it has. If you're asking me personally, I believe it will last for another couple of years. If you'd been asking me 4 years ago when the crunch happened, and I'm always honest with people, I believe that the Olympics coming to town would kickstart things again and get things going again. And people who spoke to me then and have heard me speak back then would have heard me saying 2012, 2013 things will pick up. It's taken a bit longer than I believed, and I think we're a bit behind that. So I don't think it'll be 12, 13. I think it'll be more like 2014 when it picks up. But I do believe it will. There's so many people wanting to move. Properties are starting to move a little bit more quickly now. It's a little bit harder to get the discounts. It's very, very early days. The finance companies are lending. They're lending more freely, and the paper. My passion, one of my passionate dislikes, is that the papers love to spread negative news. So we get to hear lots of negative stuff. We don't necessarily get to hear the positive stuff. So for me, the market's starting to move. There's still some more bumps to come, but I don't believe we'll flatline. Now, whether I'm right or wrong is another thing. So I don't want somebody to invest just on my advice on that basis. You need to make your own decisions and weigh up your own things. But my opinion is that property will rise. The other thing is the core economics of property, which is on the house prices video that I mentioned. But the absolute core economics is we've got immigration, so we've got increasing households from that. We've got more people divorcing, creating 2 households for 1 family, so that more households are needed for that. We're already 1 million houses short of what housing stock we need, and it's open knowledge that we're not building enough houses each year, so that £1 million figure is getting higher every year. So what does that do? That means that people have to rent instead of buy. So at the moment, rents are going up, and that's what will keep happening, but that will ratchet up and ratchet up. At some point, and we're getting there, people get fed up of paying high rents and realise it's cheaper to get a mortgage, and people will start to get a mortgage. House prices went up over the last 80 years. You couldn't get 100% mortgages 20 years ago. You had to put a 10% deposit down. You had to know the bank manager. So going back to those times isn't a bad thing. I think it's a good thing. It will control things better, make things steadier. But I do think that the standard economics, the last thing that Chris always says, who I work with, he'd say to you, look, they're not building more land. And it's totally true. There's more and more people, not more land. The prices have to go up. So that, yeah, my opinion is they will go up. and they won't flatline, but I can't guarantee you that. Thank you, John. That's really good. I've got a pension pot of about 65k. Would this be something I could use to invest in the short to long-term plan to gain 3 properties in first year, etc.? Thanks, John. Yes, John, 100% definitely. That's John Stringer. We can definitely help. Please get in touch and put pension in the title. That is something that we can help you with, John. And now we need to manage the rest of August. I think I'm going through questions we've already answered. Thanks, Aaron. I've connected on LinkedIn, if that's okay. Got to go send the emails. Yeah, feel free to connect with me on LinkedIn. That'd be great. Can you share your junk leads as they may be interested as I flip as well as rent? I have 200 grand to invest but want a quicker income than you are suggesting. Is there some other type of business that can be done? Yes, there potentially is. So please, please get in touch with me directly. Let's have a look at your options. With 200 grand, the model can be made to move a lot quicker. Yeah, we can probably produce income in 2 to 3 years. It depends what income you're looking for, though, and what you're looking to do. We do stick to our model, but there's ways. Yeah, with investments bigger than 60, I've just stuck to the core. If you've got 200 grand to invest, we'd love to speak to you. I've got a great question here. How long do you think it would take to recoup from our investment so we could have the choice to leave our full-time jobs and live off the property income at a modest level? It depends on your level of investment, David. So I don't know how much you're thinking of investing, and living off your income at a modest level is different for everybody. So some people say to us, the first thing we do with anybody is we goal set. The first thing you'll do if you speak to me, Chris or John, is we'll goal set with you and we'll work out where you're trying to get. The second thing we'll do is we'll look at where you are now. What I'd really strongly advise is we do a financial review for you. The guys normally charge £397 for those, but I've had permission from Chris and John to offer those for free tonight, and we've not covered it. But I'd really strongly suggest we do a financial review for you, which will help you to goal set. It will help you to work out where you're trying to get to, and it will look at what resource you've got available. And then the guys will be able to come back and recommend a plan for you of how best to get there using property. Now, part of that plan might be working with us. It might not be. It depends on what you're after and what you're looking to achieve. But they can then put together a really specific plan that's specific to your personal circumstances, Dave, and show you how to do that. Because some people's desire is, I want to retire in 4 years, whatever. And the driver is more about that. And if it's only 15,000 income, that's fine. I want to be out in 4 years. Other people say, well, I need 30, so I'd like to be out in 4, but I'm happy to do 7 or 8 or 10. So, and other people will put more money at the beginning. You know, if you invest 120 at the beginning, you could be out in 2 or 3 years. But again, it depends on the income. So I hope that helps. If you want to get more specific on here, you can do. You can email separately, and we'll have a chat with you about it. Great question. Sorry I've misled you, Teresa. If you're interested in JV scheme, is 300k the minimum investment the joint venture partner has to make? No. It's £60,000 investment you're looking for from your joint venture partners. So you're looking for joint venture partners who can find 60,000. You can even tag 2 of them together if you like, Teresa. So you might find 2 with 30,000 each. The reason I mentioned the magical 300,000 figure is that is what would get you, as the person that finds them, the income from your share of the portfolios that you build with them of 50,000 per annum 10 years from now. So that's where the 300k came from. But yeah, you may just find one joint venture partner with 60,000, and that's fine as well. So yeah, come on to the JV webinar, and we can definitely help you with that, Teresa, in more detail. Great question, though. Thank you. Lovely comments. Thank you coming in. Thank you. I'm glad you've enjoyed it. What's been the worst case scenario so far? The least profit expansion with a client to date. Right, the worst property we've had so far, I can share lots of situations for myself. Okay, so we've had, in our portfolio, we've had the drugs den, the cannabis factory. Every room had been turned into a cannabis plant. There was things on the windows, and it eventually blew up when the 3 different gangs decided to have a turf fight over the property. Okay, bad news. It cost us £4,500 to put that property right, mainly because there was so much soil in it and the electrics were in such a mess. But we were able to put it right. It's rented again, and it's a great property. And that property overall has made us profit over the period. You know, I've bought badly in the past. I could share lots of stories with that. I don't want to bore you all with my stories. For an investor, the worst case scenario we've had is a property we bought for someone who's become a real close friend of mine. He won't mind me mentioning his name, Dean. Dean's a fantastically good friend. We got a property for Dean, and the property got trashed. We had the vendor fall out with neighbours. He then claimed to, he claimed to die. He got his parents to ring up, parents in inverted commas, claimed he was dead. The property was trashed. He'd done one. We still don't know whether he trashed the property or people after him trashed the property. But anyway, we had a totally trashed property, literally radiators off the wall, fully flooded, kitchen ripped out. Okay, why am I saying this when I'm trying to encourage you to work with me? To show you how we manage things. That property was insured, of course. We make sure the right insurances are in place. That's part of what we do. So that property was insured. So to make matters worse, because the radiators off the wall, we turned the stop tap off, and the stop tap failed, and that property also flooded. So it literally was a disaster zone. However, property insured. Landlord, has now got a property that is fully refurbished. It's got a new kitchen, new bathroom, new radiators, new boiler, new everything, new carpets, fully redecorated. It's re-tenanted, and is making great profits. And it's making, it's just in a phenomenally great condition and in a great place. And the insurance company have paid for it. The key there is that property was empty for a period of about 5 months. The insurance claim took longer to come through than it should, and it was empty for 5 months. Throughout that period, Dean had the contingency fund in place, because we always make sure, so it wasn't affecting him at all personally. He was frustrated by it. It wasn't affecting him. The contingency fund was paying for it, and the property was relet. In terms of my personal views on worst case scenarios, there'll be funny ones that you won't see as that offensive, but I hate it, passionately hate it, if we trigger our 8-week clause and we don't rent a property in 8 weeks. That happened twice, 3 times in the last year. So in the last full year, that's happened 3 times. On 2 of those occasions, we had tenants. They were moving in 3 weeks' time or what have you, and then they let us down last minute. So they paid a deposit to hold the property and then didn't move in. And then we ended up going over the 8 weeks. And I just hate that, because I hate us not living up to our guarantees. But because we got the guarantee, the rent was paid anyway. So it wasn't bad for the investor. That was bad for the Insight Group and for us, because we had to pay for it. So apart from Dean's example, we've had examples to deal with. There's maintenance issues. We've got neighbours complaining about the guy who's smoking cannabis in the back garden. We've got somebody who's on drugs. There's a common theme here, unfortunately, but someone who's on drugs in a property, and we've had to manage them out and get rid of them. We've got a tenant who's got into arrears, so it's taken 4 months to get them out. But all of these things are covered by contingency, and these are things that you need to learn to manage and handle, and be able to emotionally handle if you're going to invest for yourself. You need to have the right mindset, and that's why I started with mindset. If you get a copy of my book, there's a big chapter there on mindset. It's crucial, and Simon does a lot of teaching on mindset, and it's really, really important to have the right mindset. And these are things, if you're going to invest for yourself, you need to be able to manage. Whereas if you're investing with ourselves, you'll have the peace of mind. You'll still be frustrated. You'll definitely be frustrated. You won't like that this has happened to your property, but you'll know that we're dealing with it. We'll be on top of it. We'll be communicating with you, and you'll know that professionals are handling it in a professional way, that you've got a contingency in place to manage it, and you don't need to worry about it. So I hope that answers, Kay. I've tried to be as honest as possible. If that's created more fears and more worries for you, I'm sorry about that. But if you manage it and you've got that contingency there, it shouldn't be a problem for you. But please come back with more detailed responses if you need to. Question on mortgage: does the money to pay the mortgage come from the rent? I ask as though I'm a loan earner and not sure I could get a mortgage with this type of investment. Yeah, great question, Rupert. Yes, the money to pay the mortgage definitely comes from the rent. So the rent covers all the costs, plus has every single cost, plus a budget for maintenance, plus has £50 a month left over at the end of the month. So to make sure you never have to put any more money into the investment. So all the costs are covered. You don't need to put any extra money in. It's all covered. If you are a low earner, you won't have a problem getting a mortgage, but I would like us just to review with you and look in detail to make sure that we believe that investing in the property is the right thing to do, i.e. that you would have enough contingency and enough fallback. We just make sure that you've got enough within 60,000, and we'd probably build in, with a low earner, we build in even more buffer and just go a bit more cautiously so that it just never ever affects you. So it shouldn't stop you, but please note that we'll proceed with caution in those cases and make sure it's right and property investing is right. Is it Aaron or Alan? It's Aaron, A-R-A-N. So yeah, it should be up on the screen in front of you. It's Aaron. Thanks very much, Les, for that email. That's great. Yeah, what percentage do you charge for full management? It's 10% plus VAT. Yeah, so 10% plus VAT for the full management of a current portfolio. So you're down in Eastbourne. We do have experts on the field there, so we do have maintenance teams. It's quite a bit more expensive to get maintenance jobs done in the south than in the north, but we have the maintenance teams on the ground in Eastbourne, and we have the ability to rent properties in Eastbourne as well. It depends on the properties, but again, if you send us the portfolio, Lee, we can have a look at that and work with you on that, not a problem. Thank you, Catherine, for your feedback. That's great. What are the best areas for investment in the north? I think I've more or less answered that. There's still 31 of you on the call, which is absolutely wonderful. I really appreciate it. I'm going to stay on for about another 20 minutes, guys, if there's still questions. And then I'll be going to my bed or going home to meet my wife and see my wife. But yeah, best areas for the north. I think I've covered that, Les, but feel free to come back to me if you want some more info on that. David, what about if the euro collapses? Yeah, listen, like I said before, I don't know what is going to happen. I don't have a crystal ball. Will the euro collapsing affect the economy? Categorically, yes, it will. How will it affect it exactly? Don't know. Will there be a drop in prices? There may be. Do I believe it will be another 15 to 20% drop? No, I don't. But did I predict the drop in 2007? No, I didn't. So you've got to decide that for yourself. I think if you're going to invest in property, one of the biggest challenges to people investing in property is getting over their fears. And fears are often, not always, but fear for me stands for false expectation appearing real. So I have a fear for heights. If I go up the Eiffel Tower, I'm terrified. There's barriers all around you, but I'll be crawling at floor level. So I'll go up to appear brave, and because I think I ought to, and I'll be with my wife, Layla, but I definitely won't go near the edge, and I will be crawling at floor level. Now, the barrier's up above my waist. There's no way I'm going to fall over it, but I have a fear of heights. But it's a false expectation appearing real. I'm not going to fall off, but there's a panic in me that I will. And often it's the same. It's the main thing that stops people investing is a fear of the unknown or a fear of what if it goes wrong, and they've heard this story or that story. And that fear causes paralysis, and before you know it, 2 years have passed, 5 years have passed, 10 years have passed, and that person hasn't done anything because of the fear, and they've not moved forward. And if you look around your friends and family members, you'll see this with people in bad relationships, bad jobs. They don't get out of the relationship or out of the job because they have a fear of what it'll be like once they've got out. Will it be worse? Will it be better? Okay. So it's the same with property investing. You've got to do the best you can to allay your fears. Now, if you're going to invest in property, and by the way, David, this may not be applicable to you, so I've just picked up the thread and the point. If you're going to invest in property, and by doing that, at the end of your investment, you're going to spend every month worrying about it, or every day and week worrying about it, and worried about what's going to happen, then investing in property is not a good thing to do for you, because you don't for whatever money you're going to make, it's not worth that worry. But if you can get yourself to a place that's comfortable to do that, either by becoming a master yourself, going on as many courses as possible, learning as much as you can, or via using a company like ourselves who are absolute experts and do it all for you, then I would really strongly recommend those two paths. And if one of those can get you to a point of comfort, ask all the questions, drill into the detail, get honest answers, and then listen to your heart and where you are, and decide whether you can be comfortable that it's a good thing to do or not. I'd strongly recommend the same if you're in a couple. If you're in a couple and you can have one person that wants to do it and the other person's really reticent and fearful, and there's no point moving forward without them. You've got to get them to a place of comfort first, either through education or through working with someone like ourselves. Otherwise, you have to kind of agree between you, we'll risk this, but we won't risk that. And the person who's up for it needs to understand that they feel that that's a real risk. There might not be a logic behind it. All the logical reasons might say we should invest, but if there's a fear there, you know, I know it's crazy to be fearful, but I'll still be fearful next time I'm on the Eiffel Tower. I've got somebody saying the £50 plus at the end of the month of rent might be subject to tax, but would it be possible to put it through an overseas company to stop paying UK tax? Do you have many investors that do this, or is it not worth it? There's lots and lots of different structures with property. We can speak offline about them, but for me personally, you want the ability to leverage your investment, and the way that you leverage your investment is by remortgaging and being able to draw more money out. And the easiest way to do that is if the property is in your name, and therefore the income and the profits are in your name. So for me, if we're spending, you know, if we're paying a bit of tax on the 50 quid, I'm not overly worried in the scheme of things about that. And in fact, you know, if the Insight Group make you more than 50 quid, because that's the minimum, if they make us 100 quid and we have to pay a bit more tax, oh well, you know, you only pay tax if you're making profit. I'm totally into being tax efficient, by the way. I'm into looking for the best structure, the best legal way of doing everything. So I'm not saying don't do it, but just from my point of view, for the 50 quid, it's not worth it. You know, yeah. But there are people that do it. You're definitely right. Unbelievably, I think I've come to the end of the list of questions. I could be wrong, so I'll just quickly click back across. Can see there's still 32 of you on there. If there's anybody that I haven't answered your question, there's some people still with their hands up. If you've got your hands up and I've answered you, would you take your hand down? But if you have got a question that you still want answering, please would you put your hand up, and then I can try and answer that question. Okay, I can see a question from James Kyle. James, I've taken you off mute. Are you able to hear me, James?
I can if you can hear me, but you've answered my question now.
That's absolutely great. Thank you, James. Yes, I can hear you, and I'm glad I've answered it. That's brilliant. Thank you.
Appreciate you staying on for so long.
No worries. Thank you. Thank you. I've just looked down the list, guys. Thank you for that, James. Mag, I think I've answered her question. I think Mag's gone. Paul Beard, I'm not sure I've answered your question, Paul. I've put you up. Are you there, Paul? Okay, anyone with their hands up, I'm going to take your microphone off mute. Hi there, who's that, sorry? Hello? Hello? Okay, I think Rupert or Siddharth? Okay, guys, I think I'm struggling to pick up any other questions. So what I'm going to do, thank you so much for listening. Really glad you've enjoyed it tonight. I assume you have if you're still on, unless your computer just sat there and you've gone for your cup of tea and watched The Apprentice. But yeah, hope you've enjoyed it. I'd love to work with some or all of you. I really would. So if you've enjoyed me and my time, please get in touch with the company. We'll get all the free stuff out to you, but specifically if you're interested in working with us, make sure you get that interested email over to us. Make sure you get that JV email over to us. And yeah, we'd be absolutely delighted to work with you. I think we're going to be very busy in the next couple of days dealing with all the requests that have come in. So if we're not back to you by 9 a.m. in the morning, please forgive us, but we'll get back to you as soon as we possibly can. And yeah, if I've failed to answer your questions, drop them on an email. You've got my email address on the screen there, aaron.curry@propertyinsight.info. Just drop that email across, and yeah, I'd be absolutely delighted to help. Okay, guys, best wishes. Hope you're all well, and I'll speak to you soon. Thank you.